Hello and welcome to the second day of ABG Investor Days. We have an exciting schedule ahead of us today with close to 20 companies presenting. My name is Adrian Gilani and I'm an equity research analyst here at ABG. And I will be moderating the first presentation, which will be given by CEO at Scandinavian Biogas, Mr. Matti Vikkola. He will hold a roughly 20-minute presentation and we will do some Q&A after that. With that being said, Matti, please go ahead.
Thank you very much, Adrian. Pleased to be able to attend the meeting here today, and especially very pleased to see that at least quite many have arrived physically here, given the quite challenging weather conditions in Stockholm. But also welcome to all of you who are online. My name is Matti Vikkola. I'm the CEO of Scandinavian Biogas. Have been now leading the company a bit more than 10 years. And would like first to start about what are we doing as a company. We are producing biogas and we are using organic waste streams as raw material for that production. The output which we receive from the production, microbiological production, is biogas which can be used to produce power and heat, or you can upgrade it and use it as a vehicle gas, or you can inject that into the grid. Vehicle gas has been the traditional way to use it here in Sweden. To inject into the grid has been the way how it has been used, for example, in Denmark. And then the newest innovation in our industry is that one liquefies the biogas, so it becomes from a chemical and physical perspective the same product as LNG, but our LNG is green, it's bio-LNG, and that is something which is very attractive as a product because it's much easier to transport it and it can be used for different kind of, purposes such as heavy transportation and shipping. What was very important last year for our industry, it was a game-changing year due to the Ukrainian war. So far, we have been driving and supporting the CO2 reduction in general. Now we are also supporting actively assuring the European domestic energy supply, and that is boosting both the demand, but boosting also the investments in our sector. The other one, what was important for us last year in general as a market, is that the usage of the CO2, the green CO2, will offer opportunities and additional income for us in the future. How to use the bio-LNG? As we see, the main market longer term will be heavy transportation. Due to the fact that the gas engines have been substantially improved, there is a good selection of suppliers of heavy trucks. What we did last year is that we signed an agreement with a Dutch supplier, a German supplier for LNG and bio-LNG. They have already around 40% market share of filling stations for heavy trucks with LNG and bio-LNG. That is an agreement in the range of 1 terawatt hours or 2.7 billion Swedish crowns in value with market prices. The other segment which will be important taking us forward is the maritime usage. There are already now 500 ships either already using LNG or going to use quite soon. And then the third segment is industrial usage. There's a huge need to renewable energy from industrial customers' perspective, but that is a industrial segment where we see that the price point will be somewhat lower than for heavy transportation and shipping. So we believe that the volumes will go mainly to these two segments when taking forward. What was important last year is that, as I mentioned, due to the fact that European Commission wanted to boost the production of biogas in Europe, several investors have flagged for an interest to be part of the game. Goldman Sachs just announced a interest to invest 1 billion euros in European biomethane market. Shell took over the Danish Nature Energy with a enterprise value in the range of $2 billion. Varo has announced 3.5 million total investments, and our understanding is that around 800 million of that is for biomethane. And then from political angle, our industrial cooperation organization, EBA, has initiated with EU Commission a partnership in order to assure that bottlenecks will be resolved and the growth will be boosted. So these are the key points from the market perspective. If we take then our company as such, at the end of the year, our intake and offtake order book was on a level of 2.4 terawatt hours. One can compare that with our supplies last year, which were a bit less than 400 gigawatt hours. So it is more than around 6 years volumes given the last year's volumes. We established last year a growth-oriented organization in order to be able to better meet those needs which we see in the market and to leverage those opportunities. We are happy with the pipeline we have overall internally in order to reach our 2024 and 2026 targets, which I will describe a bit later on. What was also very important last year, that we saw a substantial change in the market prices for biogas and biomethane, which implies a 50 to even 300% premium compared to those prices we had earlier on. However, this price change will take some time because the old agreements are based on the old prices and the new agreements are based on the new prices. And this slide is showing how we are transforming the prices from old ones to new ones. Traditionally, the prices we have had for our biogas have been around 600 SEK per megawatt hour, and the new agreements in Scandinavian market are in the range of 1,400 to 1,800. So there's a substantial premium compared to what we have received earlier on. And then in the German transport sector, given the agreement I was referring with Alten, the average price is in the range of 2,700, given those market prices we have had at when we signed it, and even now in February. And this 2,700 price is especially in the German transportation segment. It's worth noting that majority of that income is related to CO2 certificates, and minority is based on energy income itself or energy itself. So subject to what kind of, say, feedstock we are using, we can have higher CO2 value or lower, and as well as then commercial impact of that, with a good opportunity to be able to influence the total income. And then on the graph, you will see how we will successfully reduce the share of old agreements and increase the share of new agreements, and that will then boost our profitability when taking company forward. On this slide, we have the volumes of current facilities and those investment decisions which we have made, but the new ones forthcomes for the future, which are in the pipeline, they are not yet included here. Due to the fact that energy prices were higher last year, and given the fact that our energy or sales prices in the old agreements are fixed with an annual indexation, we were forced to reduce somewhat our supplies due to the fact that some of the raw materials we used, like glycerin, became so expensive, and that was one of the reasons why the supplies and net sales last year were somewhat lower, and we are now preparing for the future, getting better value for the products and even increasing the volumes. We signed agreements on a level of 1.3 terawatt hours, so it was the 1 terawatt hour with Alten in Germany, as well as 300 gigawatt hours here in Scandinavia with the leading player. What we also did is that we had a share issue last autumn, and we were able to strengthen our financial position. We received altogether 326 million additional equity into the company, mainly coming from the Norwegian Aneo, And today we have two largest shareholders own around 50% of the company, and four largest around 70% of the company. Worth noting here is case Landvärme. You may have seen some publicity during the last days in Swedish media. The EU Commission granted Sweden a tax exemption for the energy tax, which for biogas for a 10-year period until 2030. That was there was a legal case on that in EU tribunal, and they, due to process reasons, did not accept that tax exemption, and actually now Swedish government have decided to encourage the Commission to reopen the case and to do the evaluation as needed in order to assure longer term the tax exemption. But as we speak today, that tax exemption does not apply for biogas in Sweden, and we will see somewhat higher costs for biogas users in the range of 20% plus, as I would expect. The main points for our last quarter, I think, is to what I would like to flag for is that we were able to make a decision on a large-scale investment project in Mönsterås in Sweden on a level of 760 million Swedish totally. The facility will commence next summer, I mean summer 2024, with a total capacity of 120 gigawatt hours annually. So that is the most important one to flag for here, and we had also some operative challenges in Skåne 2 when we are commissioning one of the investment projects there. They have been now improved during the first months of this year substantially. As you see here, the sales have been say pretty stable level, but the operative EBITDA last year we were not at all pleased. The main reasons for the drop for the first two quarters were that we did not receive the production subsidy from Sweden, which we have received the quarters before at the end of 2021. The drop in 2022 Q4 was related mainly to the challenges in the commissioning in Norway, Skåne 2, but also to high energy prices. We have hedged our power usage for a large part, but not fully, and that has impacted the profitability Q4. Cash flow and cash position, key point here is that the cash flow was lower than before, given the lower profitability. Main cash out is related to our substantial investment program, which is ongoing in order to boost the production and to leverage the situation out of the market. Given the share issue at the end of the year, the total liquidity of the company was on a level of 560 million. And this, in this figure, our revolving credit facility on 300 million is not at all included. It's not used yet. And that implies that the net debt was on a level of 360 million, and including leasing on a level of a bit less than 260. So the net debt without the leasing was a bit more than 100. What is important is to look forward, and given the unsatisfactory financial performance, how are we able to improve the profitability? We have confirmed a couple of years ago our financial target to be to reach operative EBITDA margin on a level of 30% at least 2024. The key drivers to achieve that target is increasing the production volumes, mainly coming from the Mönsterås project and the Skåne 2. So that implies that the volumes will be increased by 30% when comparing to 2022. Given the change in the market with the prices, we see that our sales prices per gigawatt hour will improve by increase at least by 40%. And we see also that our COGS, our operative costs per gigawatt hour, will also increase somewhat, but not at all in the same speed as the sales prices are doing. So having said that, what we expect ourselves to be able to show a profit before tax when our facility here in Stockholm and the Mönsterås have been commissioned and have reached a good reasonable operative capacity utilization level. Mönsterås project, we will start the commissioning summer 2024. Stockholm LBG, we will start already this summer 2023. And the investment projects which are now ongoing, this is a summary on those. These are aligned with our 2024 targets. It's a total value of a bit more than 1.6 billion Swedish crowns. Substantial part also financed by Klimatklivet as grants, but the main equity financing is already assured. Some additional debt financing may be needed and will be needed for Skong 3. They are already all ongoing or commissioned. Skong 2. Skong 3 is still something what we are assessing what is the optimal way to use the money and to improve the profitability at that facility. And then when taking the company forward, our aim is to reach 3 terawatt hours 2020-30. And to compare this 3 terawatt hours target, EU Commission target is to have 340 terawatt hours in Europe 2030. So it would imply a rough 1% market share in Europe. And given the fact that we have already made investment decisions on level of 600 gigawatt hours, and the target for 2026 is 1.2 terawatt hours. We are looking for additional investments in the range of 600 gigawatt hours the forthcoming 22 months before the end of next year, with a total estimated investment budget on around 3 billion Swedish crowns. And as mentioned, the key financial targets 2024, at least a revenue on 650 million crowns and operative margin at least 30%. And how could the company look like 2030 when the targets and which they are would be achieved? We see the Northern Europe as our home market. Northern Europe, including besides of Nordics, Germany, Poland, and Benelux, and roughly we estimate that the capex for 1 gigawatt hour is 4 to 6 million crowns. So additional 500 gigawatt hours implies a total investment between 2 to 3 billion crowns. And then finally, the outlook for this year, we see that. Some of the challenges we had last year will continue during the first half, but when we are able to commission now the Stockholm LBG facility during the second half, and we get also a positive impact from the renegotiated volumes, we see a improvement in the group profitability, taking the company forward. So this was. Overall review on Scandinavian biogas, and I'm pleased to take any questions.
Okay, perfect. Thank you so much for that presentation, and we'll go right ahead with some Q&A. Starting off, you were pretty clear on the 2024 targets, and you showed us all the expansion projects leading up to that. But then there's a pretty big jump from 600 gigawatt hour capacity in 24 to a target of 1.2 terawatt hours in 2026. Can you just talk a bit about how the pipeline looks beyond 2024?
Okay, very good, thank you. The additional requirement in order to reach 1.2 terawatt hours, one project which we have already referred is the Skong 3, which is in the public domain. We have also already confirmed that we have a project in Skånes Fagerhult, for which we have received Klimatklivet investment subsidy on a level of 150 million Swedish crowns. That is something which is in the pipeline. So these two should be on a level of 200 gigawatt hours of the remaining 600, and thus the question is, how do we achieve the remaining 400? And the remaining 400, we are looking investment opportunities both in Sweden, and secondly, we are looking also opportunities in Germany and Poland. We are pleased with the pipeline, and as I mentioned, our aim is to be able to make all these investment decisions before the end of next year. So we need also to assure the financing, and that implies that we need to be able to be very specific with these projects still this year. And what is important to note is that we are clearly aiming to standardize, use same kind of a feedstock, mainly from agricultural sources, manure as a main source, and standardize the facilities and the functions in order to win time in negotiations with suppliers, but also getting benefits in the operations and maintenance.
Okay. And when we look at the pipeline of, again, 1.2 terawatt hours to 2026, are you exclusively looking at greenfield projects, or are you considering M&A as an alternative as well?
We are definitely looking at M&A opportunities as well. However, our strategy is based on a bit larger facilities than the market average is. So, say the number of those facilities which have a very good fit with our own strategy is fairly limited. Having said that, we are of course looking also for other opportunities, assuming that there is a reasonable investment needed to improve and renovate the existing sites. But yeah, we are looking, but it's I would say the main path is greenfields.
Okay. And regarding pricing of biogas as well, of course, the expansions you are currently doing, they are adding volume, but they're also converting from your current compressed biogas production to liquefied biogas. Can you just talk a bit about the differences there and why liquefied biogas commands a higher price and why that's an interesting investment for you to convert?
Yes, we have traditionally here in Sweden, we have sold a large part of our biogas as a compressed biogas as fordonsgas, as a vehicle gas. And given the higher premium and higher flexibility, we decided to invest in the bio-LNG facility here in Stockholm, in Huddinge, Södertörn, with the aim to increase the premium. And the reason for the premium is partly related to that we have a broader base of customers. We can transport it, export it. So that's one of the factors. Second factor is that it offers a broader base of customers which can use it. That's one factor. And then I think one very important factor is that in the continental markets, there is a more developed market for the certificates, green certificates for the biogas, which we do not yet have here in Nordics or Scandinavia. So we will get more value for the green energy when we export it, for example, into Germany.
And the price or the premium price of liquefied biogas, would you say that this is sustainable long term? I mean, currently supply is pretty scarce, but presumably over time there's going to be more competition here. Is there a risk of it becoming commoditized over time?
That's also a very good question. The liquid biogas market is a fairly new market. It's expanding very fast. Demand is driven by the heavy transportation sector, especially shipping as well, given the EU regulation forthcoming. I would expect that the price level, the supply demand will do its own balancing in a way. But more important is the regulation, how the regulation is steered. Now the German regulation is applied until 2030, and there are some discussions that even the European CO2 trading system, ETS, would be applied on traffic sector, which in our mind should also boost the value of the bio-LNG in the European heavy transportation market overall. So there are factors which are supporting the pretty good price picture, but on the other hand, also some the volumes are increasing, which means that the supply is increasing. it's quite difficult to see how the price will really stabilize, but we are pleased with the current prices we have with the LNG, JDF. It is substantially lower than it was 6 months ago, as well as the values of the green certificates.
Okay, and just one quick final question on some recent news flow. You talked very shortly about this tax exemption that was denied by the EU courts in Sweden. Can you just very quickly describe how that affects you in the short term?
The impact is so that in the system, the player the supplier who is selling to end customer, they have the obligation to pay the energy tax. We, to the extent we are producing and supplying to a distributor, it doesn't impact us as a tax, but then it can impact in terms of volumes. So if the volumes will go down in Sweden due to the higher prices at pump, then we'll have an impact for the value chain. But we are also now pleased that we have the bio-LNG opportunity here in Stockholm region because it offers us opportunities to export in case the volumes get lower here. For those customers which are the final customers, we have also the obligation to pay now the tax, which we see that we have the right to put it as on top to the selling prices as it is a tax.
Okay. With that being said, I think we're running out of time, so I'll just leave it up to you for some final remarks, if you'd like to say anything.
Yeah, thank you very much, Adrian. It was a great pleasure to having the opportunity to be here. Major changes in the biogas market last year, boosting the demand and really supporting the industrial development. It's a very exciting phase for our company, and we are really excited about the growth opportunities which we are now working with.
Perfect. Thank you.
Thank you.
Good morning, everyone, and welcome back to ABG Sundal Collier's Investor Days. My name is Benjamin Wallstedt. I am an equity research analyst out of the Stockholm office working for the consumer and retail space. With me today, I have Embellence Group and CEO Olle Svensk to present his company. So, Olle, please go ahead.
Thank you very much. Welcome, everyone. My name is Olle Svensk. I'm the CEO of Embellence Group, and I've been in this role for 7 years now. And I have the pleasure to take you through about Embellence Group. I will start to present a little bit about the company, then quickly give you a snapshot of our Q4 result, and then last bit will be questions. Embellence Group then. Yes, we are a company that acquire, own, and develop strong brands. We have a clear house of brands strategy, decentralized model, and we want to take a leading part in the industry to consolidate this industry. So key categories are wallpaper, textiles, and rugs, but also other interior decoration categories. And we are present all over the world, and we have the largest country being Sweden with around 35%, but the rest is outside, mainly in Europe and North America. And what we do then? Yes, we have 5 strong brands with 5 strong identities. First of all, and the largest one is Produktionsteamet, which is the market leader in the Nordic region and in Sweden as well. Classic romantic wallpaper designs, mainly wallpaper, but we have also expanded the collections or the categories into textile as well, which is being rolled out now. Wall&decò is an Italian company, which is, I would say, really one of the most innovative brands in the industry, based out of wallpaper, out of classical wall murals, but also have a couple of really interesting categories where we can do the wet system, which is an alternative to tiles in shower rooms and bathrooms, so it can resist water and humidity. And we also have out system there on the right, for those of you who want to have a splendid, marvelous design on your facade. Cole & Son has been with the group since 2009, if I remember correctly. It's probably I would call it the crown jewel of the brands we have, based out of London, has over the last years moved into not only premium, which is our core focus, but even up to luxury. And it's mainly wallpaper, but we introduced textile and also cushions a couple of years back based on the most loved and iconic designs that we have. Pappelina is rugs. It's now we're in the northern part of Sweden, in Falun, mainly rugs with clear distinct design as well. And as we have done with Produktionsteamet as well as Cole & Son, we have moved into adjacent categories, keeping the most popular or most sold designs actually. And last but not least, a year ago we acquired Artscape, which is based out of Portland, Northwest USA. They are in the very small but very attractive category of window films. So basically wallpaper designs, I would say, window films for privacy, but also for decoration. They are the market leader in premium in the US, and one of the many things that we saw as a potential here is that we will bring that brand into the European market, which we are working on and should happen during this year. So brand-based. Brands are extremely important to develop them and to be the clear leader in their segments where they are. So our business model, as I mentioned here before, focus on building premium, and since a year ago we dared to talk about luxury as well. And why do we do that? Yes, it's because that is the part of the market, regardless if you're in textile, in wallpaper or rugs, that we see an underlying market growth, which is always healthy, as you know. Then on top of that, it is also shows resilience, I would say, and we can see resilience in our numbers as well, that the more premium or luxury the brand is, the stronger it can resist the current situation we have right now. But it also offers much better gross margins. The gross margins in these segments are attractive. Last but not least, we strongly believe in decentralization. Then, of course, finding smart synergies in what we do, but to be decentralized, because many of the brands, you know, their local competition for Wall&decò is not the same as for Boråstapeter. Many of the competitors are family-owned and fairly small businesses. And we believe that speed and passion and engagement will always beat the synergies that we might find short term. Our financial goals that we launched when we had our IPO in 2021 was to double our revenue compared to 2021, up to 1.2 billion, having an EBITDA margin of at least 15%. Then we have a net debt target as well, or goal, not exceed 2.5, and we have a policy as well, a dividend policy. So, building strong brands in premium luxury position, international growth, that means for us hedging our business, not only being dependent of the Nordic market. Now we have around 60% of our business outside the Nordic. We have nothing against being in the Nordics, but we do believe it's very important for us to hedge our business in geography, in category, but also in channels. Closer relationship with key stakeholders. I would argue that we have two key segments or stakeholders or customers. We have the end consumer, especially for Pappelina, Artscape, and a large part of Boråstapeter brand. But then we have what is in our industry called the A&Ds, which are the architects and designers, the ones that specify a hotel like this, or a luxury apartment, or luxury residential somewhere. They are the specifier, and we need to get really close to them and influence them, and give them, you know, different tools so they can easily suggest our offering. We have launched direct-to-consumer into this category. You can argue that we were a little bit late, but I would argue that we are far ahead any of our competition here. It's still fairly small numbers, but we do over the last 6 months, we see a growth that is more than 30% in this part of our business, and with a gross margin that is at least 80%. And we charge for freight, which not everyone does, right? Environmental footprint or decarbonize and reduce our carbon footprint. It's another initiative or another part that is really important for us. And last but not least, we want to have the best people in the industry to us, work for us, and be attractive. So, being it in London or in Bologna or Milano or wherever we think we have the best talent pool. I will not go all through this, but remember, we are not only Boråstapeter, we are not only Sweden, we are becoming an international company. We are selling into more than 100 countries every year. We do have a multi-channel approach into the market. We are not only D2C. We sell to customers who sell online. But the ones that, as I mentioned before, are key for us, it's the end consumer, but also the architects and designers specifying projects. And they specify, these A&Ds, they don't sit in Stockholm or in Borås. They sit in London or Milano or in New York. And this is where we spend a lot of money and time and attention to make them specify our brands. All right, moving on to Q4 then. Probably all of you or most of you have seen that before. We had a quite sharp slowdown in the Nordics in the fourth quarter with minus 26%. Europe, was unchanged more or less, and actually underlying an organic growth. We are not selling into Russia anything at all before, and Russia 2021 was around the 1 million SEK every month. but Russia is nothing for no sales at all for us. And we had a growth in the rest of the world, fueled by the add-on acquisition by our Artscape. So net sales a little bit ahead of last year, but it all came from acquired net sales, if you like. The EBITDA was 14.7. The adjusted one, if you take into account that we did launch and implemented a large cost-out program in Q4, and that affected us quite a lot short-term in cost-wise, at least. So we reached 22 million SEK, but we saw already during summer what was probably coming. So that's why we started with this program that was implemented fully and will have a full year effect of at least 9 million this year, and also already started to kick in January. To simplify a little bit the picture of what we saw in Q4 was that Nordics, consumer, and what I would call mid-market was tough, while premium luxury architects and designers is fairly strong. I mean, our brands that are most skewed towards architects, designer, and Europe and so on, which is Cole & Son and Wall&decò, performing quite well. They are growing organically in the fourth quarter. The mix is changing from retail sales and to more hospitality, but that part is, quite healthy. I had a discussion here before the meeting, and when we look at the pipeline for hospitality, it is not, running dry. I'm not saying that we are closing all of it. Definitely not. But there is a large interest, continue to be large interest into the hospitality segment. I mean, the moving on then, the inventory management and adjusting production has been last year, Q3 and Q4, really important. We continue to want to have a sharp eye on cash flow. That's why we could have, in the fourth quarter, increased production or kept it on a high level, which would have been healthy for our EBITDA. That would probably be 2, 3, 4 million better. But our cash flow lower and our inventory too high. And we don't know what we're heading into now, but cash flow will continue to be important. We're sure of that, and we think it's better to continue to take down our net debt. The board of directors has proposed a dividend of corresponding to 31% of our net profit, and the AGM is in April, I think. I've been through most of the numbers here. I mean, looking at some of the full year, we reached 720 million, which is 11% more than last year, fueled by the add-on acquisition of Artscape. Looking at the adjusted EBITDA was not as good as 2021, but 14.3 is at least healthy, I would say. It's not brilliant, but it's healthy. Our cash flow was strong last year. We did a good job, especially I would say in the Nordics region, but also in some other areas, to look after our inventory management, and that will continue to be a priority this year. Or is that already? Net sales, we're coming from the 560 we had in 2020, and our aim is to grow that above 1 billion, as I mentioned. However, profitability will always be we will not try to reach the 1.2 billion just to reach it if it's not profitable. Profitability will always be the key, the key KPI, I would say. Adjusted EBITDA, as you can see here, last year we had to steer the business differently, especially as profitability out of Nordics came down. Share premium, 67% of our revenue, which is also underlying helping our gross margins. Our gross margins in the Q4 last year, we improved from 56% to 59%. So we are able to it is a combination of mix, but also the fact that we have been able to implement the price increases last year. Net debt 2.1%. If you look at it excluding the IFRS effects, it's 1.7, but it's 2.1 that is the definition that we're using. Nordics, I mean, softer demand. We have implemented cost savings, not at all in the same level here as last year. Of course, in Q4, I would say that most of it happened in October, when we saw a dramatic reduction in order intake, so we reduced production there. I mean, as funny it is to have factories when volumes are up, as careful you have to be when they are going down. Europe, fairly stable market in terms of top line. Adjusted EBITDA not as good as last year, but now we're starting to see more of the initiative or the cost we basically have to being active in the market in the hospitality segment, which drives some cost for fairs and events and others. Full year, not too bad, EBITDA on 17% and the revenue more or less on the same level as last year. But please bear in mind that here you had 12 million of Russia, which we didn't have last year. We only had 1.5 January, mid-February. Rest of the world, all the increase is all coming from Artscape. The adjusted EBITDA was better, but the margin was lower. What we have seen in the business with Artscape has been started already in August, a strong inventory or reduction from retailers that has continued for 5 months almost. They are selling more than they are ordering from us. So they have reduced their inventory quite a lot. And full year, a strong increase there, a good increase here, but not really up to the expectation we have for it. But we are working on that, and I would say I'm cautiously optimistic when it comes to the rest of the world. Our organic growth underlying was positive last year, mainly in coming from the US, but also some other markets. So summing up with the financial targets, then we reached 720. We have full 2023, full 2024, and full 2025. So we have 3 more years to reach above 1 billion there. EBITDA margin reached 12.3, and we should be at least on 15. Leverage, as I mentioned before, 2.1. I think that was it.
Perfect. And we have time for some questions as well.
Great.
We talked about the premium or luxury segment growing faster than the non-premium. Could you perhaps elaborate on the non-premium segment, so to speak? What do you see in terms of consumer behavior there? Do we see down trading, or are consumers abstaining from purchasing anything at all, would you say?
I mean, we have, as I think I mentioned, there are 3 of our brands, especially Artscape, Pappelina, and Boråstapeter, are mainly in consumer there. And the part that is not premium, we have there is a reduced demand, while the higher part, it is fairly resilient. And we see that in general, but especially in the Nordics. Sweden, Finland is much lower than it was last year, and it's back to, it's even below, I would say, 2019 levels here. And it's really cautious, and we also not that many of our retailers in the Nordics are carrying inventory, but the few that does, they are taking that down as well, leaving more, up to us to be ready to ship.
And I was just about to ask about retailer inventories. So no material effects expected there from any lag?
No, now they are taking it down so much. I mean, so I would be surprised. I mean, we have followed that now for 4 or 5 months, and where we can follow it, we see that they sell more than they order. and that can only come to a certain point, you know.
Yeah, and we're approaching that point then.
Yes.
Yep.
Yes.
You also talked briefly about your D2C, your e-com offering. What are early takes there? I understand that it's a bit of a new.
The early
effort.
takes is first everyone asked me how big it is, which I won't reveal. The second is that I mentioned now that it's growing at around a little bit more than 30%.
Yeah.
It's growing in larger cities, which is it's rather, you know, London than Newcastle, and it's we are not an e-tailer. So as I mentioned before, which is, I mean, yes, we have good gross margins. We're able to sustain those of 80-85%, but we are charging for supply and shipping, which the ones that are pure e-tailers, not all of them do there. So it is a healthy business for us. We will never do discounts there. We don't see that we can, you know, it's sustainable for us because we have our D2C business is less than 10%. But it is a complement for consumers who, you know, they live somewhere where they can't find the products and it's out convenience and availability and time, they order directly. That's one part. But the other part that is actually growing, and we opened up, Cole & Son opened up Australia last Friday, last week, in local currency, which is also an important point, you know, to drive conversion. And what were the first orders we got from Australia? We have never sold anything into Australia for Cole & Son. It was all samples and also to designers and architects that use that for the mood board that will hopefully eventually end up as an order, either directly through us or through our you know, local agents. Long answer. I don't know if I answered your question, but I talked a bit, right?
Yeah, it was a very good answer. We get lots of new data points around the D2C offering here. Do you see any differences in the types of orders you receive in a more mature market, so to speak, compared to other A&D orders?
You mean the orders that we are receiving directly from our
through the D2C?
Okay, through to D2C. I mean, it's a surprisingly. It's more samples than we thought, especially into US. US now we will go live with local currency for coal in April. Let's say April, which sales is not bad there, but it will be interesting to see how the conversion will change because right now they order in British pound. I mean, generally the items or the products that we sell are rather the high-end part of our assortment. That's the only thing. But I wouldn't say that we have that many other.
I have one question on cash flow as well. Where are you in terms of investments into production facilities and the like? What should we expect here for the coming years?
We have 3 production facilities in Italy, where we have 3 digital printers. Let's call them printers. We installed them to 2021, totally new. I don't, you know, maybe some maintenance, but nothing major. Cost of them is not great. I mean, a new machine costs 60,000 euros, so it's a lot of money, but it's not that much. In Dalarna, we weave the rugs. We have around 30 weaving machines there. There was a big investment taken by the previous owner before we entered. I don't foresee anything special there. When it comes to our larger production facility, which is in Borås, where we produce wallpaper mainly for Borås Tapeter, to some external brand, a little bit to Cole & Son, we have a versatile production footprint there. We do have in the group now around 24% of our revenue, 26% of our revenue is digitally produced. Right now, we have the capabilities what we need. Having said that, probably not this year, but maybe next year or the following year, we will do an upgrade. Our capex generally has been around 15-17 million every year. I don't see anything. What has changed with that is not the amount, is rather that it's more digital, more investment in e-commerce and web platform or digital printing than traditional capex that was it we had before.
So up to speed on capex, premium shares going strong. Sounds like this year
I think
could be
most
good.
of you should just start to cry here.
Perfect. With that, I believe it's time to wrap up. So thank you, Olle. Thank you, those in attendance.
Thank you.
We'll be right back.
Thanks.
Hej och välkomna tillbaka till ABG Sundal Colliers Investor Days. Jag heter Benjamin Wahlstedt, jag är aktieanalytiker här på ABG, täcker konsument- och retail-aktier. Med mig på scen har jag Svedbergs vd, Per-Arne Andersson, som ska presentera sitt företag. Sen kör vi lite frågor på slutet om vi har tid. Per-Arne, varsågod.
Tack så mycket. Svedbergs Group. Och ja, vi är en ledande badrumskoncern i Norden och Storbritannien. Ni som känner till Svedbergs och historiken har säkert tänkt på Svedbergs i Dalstorp, ett varumärke och ett bolag. Vi har nu byggt om det här som en mer struktur med ett antal olika varumärken. Så vi är då ett bolag som investerar långsiktigt i Europas starkaste företag som designar, tillverkar och utvecklar hållbara produkter och tjänster för badrum. Och det som är väldigt viktigt är just den här med produkterna, att marknadsföra och utveckla dem. Den är väldigt viktig för oss. Vi ska växa både organiskt, genom förvärv, och det är bolag då som kompletterar gruppen, antingen geografi, kompetens eller produktkategorier. Så vi har satt kursen, vi har börjat på vår resa att konsolidera den europeiska marknaden för badrumsprodukter. Och den här karaktäriseras ganska mycket av fragmenterad med starka oberoende lokala varumärken i de olika geografierna. Så vår vision, innovativa varumärken som designar, tillverkar och marknadsför hållbara produkter och tjänster för badrummet. Och vi har ett antal värderingar. Att vi ska bygga ett långsiktigt och starkt hållbart Svedbergs. Väldigt viktigt. Vi bygger på långsiktighet i det vi gör. Skapa kundlojalitet. Se till att vi bygger köplust. Bygger en stort förtroende till kunderna. Utveckla organisationen. Bejakar olikheter. Stärker med kompetens, mångfald och innovativitet. Och naturligtvis, en del av er som sitter här vill ha en avkastning på aktien också. Ska vi se till att vi är attraktiva för investerarna. Och sen respektera entreprenörskapet, uppmuntra kunskapsdelning, att dela med sig av kunskap. Så man kan väl se vår utveckling. Bolaget är lite drygt 100 år. Man kan säga att vi gjorde ett avstamp 2016. Svedbergs, ett bolag, omsatt ungefär 450 miljoner. Stabil lönsamhet. Man sa att man, som jag fått berättat för mig, man levererar samma resultat i bra tider som i dåliga tider. Liksom stabilt, händer inte så mycket. Och även nu, ja, en väl etablerad marknadsledare inom badrumsinredning i Norden och UK. Vi har 6 varumärken, 4 varumärkesbolag som vi säger med 6 varumärken. Vi slutade förra året lite drygt 1,8 miljarder. Vi har en EBITDA på 13,7%. Vi är inte riktigt nöjda, men vi tycker den är bra. Och vi har en tillväxt och ser man i grafen att den är ju rätt trevlig så, även om den nu då är både organisk och framförallt förvärv då i den delen. Lite utifrån marknaden vi agerar på då. Sverige, Finland, England, Norge, Danmark och Irland. Så kan man se hur många hushåll finns i den här delen och det som då vi mäter nybyggnationer. Och då kan man säga att nybyggnationer står ungefär för 15% av vår försäljning. Så den är inte mer, om man säger så, med tanke på vad som sker just nu. Den som är viktig för oss är då det som vi kallar RMI, då, alltså renovering, förbättringar, underhåll och i den delen. Och det ser man ungefär hur stora marknaden är, och då ser man ju engelska marknaden som vi gick in i lite drygt för ett år sedan då, är ju väldigt stor marknad och finns också ett stort underliggande behov i att underhålla och förbättra bostäderna där. De 4 varumärkesbolagen är Svedbergs, Macke Design, Kasse, Roper Rhodes, och i Roper Rhodes har vi 2 ytterligare varumärken då för att segmenteras bra på marknaden. Och som ni ser då, där vi förvärvar Roper Rhodes 2021 i december, de står för lite mer än 50% av vår omsättning. Svedbergs för en tredjedel och Macke Design och Kasse för lite mindre delar i där. Jag kommer berätta lite mer om de här bolagen längre fram. Vi bygger vår utveckling på 4 strategiska pelare. En tillväxtlogik då, där vi ska förvärva självständiga och innovativa varumärken och som stöder den organiska tillväxten. Organisk tillväxt är väldigt, väldigt viktig för oss i att det måste finnas med i den delen. Vi har en verksamhetsmodell som är samarbete utan sammanblandning. Alltså vi drar inte ihop bolagen och jagar synergier i första hand, utan vi bejakar olikheterna. Och egentligen Charles Darwins princip, survival of the fittest i det fallet, ifall vi konkurrerar i en marknad. Inte slå upp det. Vi tror väldigt mycket på att vi låter var och en agera ganska självständigt. Vi har en ganska stor heltäckande säljkanalsmix. Vi finns i många kanaler. Det säkerställer också att vi når ut till kunden om det sker olika förändringar i kanalstrukturen. Kan undvika vissa konjunkturkänsligheter, det beror på vilka konjunkturer är den generell, så kan vi säga, det hjälper väl inte alla kanaler i det här fallet, men det gör att vi når kunden på många olika sätt i den. Och sen en finansiell struktur är att se till att vi stödjer de här bolagen och att vi stöttar dem i hur man jobbar på ett bra sätt för att kunna genomföra strategin. Så vi går in lite djupare i de här. Vår tillväxtlogik då, det är egentligen att hitta bolag då som hjälper att få en bredare geografisk närvaro. Det kan också vara så att det finns bolag som går in i ny geografi för oss, där vi letar. Nya produktkategorier. Det finns ju möjligheten i de bolag vi har att addera till en produktkategori eller att i det fallet förvärva ett bolag. Och stärkt kompetens. Varje produktkategori, varje geografi vi går in så får vi ju med oss kompetens som stärker oss som helhet. Verksamhetsmodellen samarbete utan sammanblandning bygger egentligen på att vi jobbar i en council-struktur eller råd i det här fallet inom 3 områden. Det är sourcing, produktion, digitalisering och hållbarhet. Och på det sättet vi gör att vi har en från varje bolag som deltar i den här. Vi träffas fysiskt eller digitalt och hittar gemensamma punkter inom de här 3 områdena. Till exempel tar man sourcing. Hur gör vi? Kan vi dela leverantörsriskontra? Gör vi koncernavtal? Vi tar ju hem de synergierna som vi i det fall kan hitta när vi förvärvar ett bolag och vi har samma typ av leverantörsstruktur. Digitalisering. IT-säkerhet är en sån sak som den har vi en stor vits i att göra centralt. Då lånar vi in IT-chef från ett bolag som driver det som ett koncernprojekt. Vi har ingen central resurs för det. Hållbarhet lika så. Att driva den frågan på en övergripande nivå, men det är väldigt viktigt att det finns ett lokalt ägarskap i bolag om sina delar också. Och talar man just om hållbarhet så är det i alla delar för oss är det inte någonting som vi kan lägga ovanpå, utan det måste finnas i business as usual i alla områden, i var vi än gör. Allt ifrån inköp till design utav produkterna i den här delen. Vi har under 2022 gjort heltäckande analys utifrån GOG-protokoll med både skop 1, 2 och 3. Och vi har lärt oss ofantligt mycket. Jag tror att det är ju så att det som har den största påverkan är ju hur vi hanterar våra produkter. Hur vi i det fallet kan göra hållbara produkter, återvinna produkter. Det är en väldigt stor del i den. Så att vi har gjort den och har lagt upp en plan hur vi ska bli klimatneutrala i den delen. Våra försäljningskanaler, det här är fördelningen av försäljningen 2022 i de olika delarna. Det är Norden som vi skiljer på, den är lite annorlunda struktur än i det fallet Storbritannien. Kan läsa till exempel badrumsspecialister, typiskt komfort, bad och värme, byggvaruhus, Beijer eller liknande. E-handel, det är inte våran direkt utan vi jobbar då genom kallar den återförsäljare som jobbar på e-handelsområdet. Den delen såg vi väldigt tydligt under pandemin att man köper de här produkterna på nätet i rätt stor utsträckning. Ökar rätt bra. Och på den engelska marknaden i den delen. Det som skiljer de här 2 marknaderna är att i Norden så är slutkonsumenten ganska medveten och känner igen varumärkena. I UK så är produktvarumärkena ganska okända för slutkonsumenten. Finansiell struktur, se till att vi är duktiga på att, jag brukar säga ekonomin, det finns 2 delar, det är arkeologi och meteorologi. Att både vara duktig på arkeologi naturligtvis, men också stötta bolagen i att tänka rätt i sina beslut, att operativt jobba med att uppfylla strategin, att bli mer lönsam och växa mer i den delen. Och det här är ett sätt också att se till att vi säkerställer att vi kan uppfylla strategin. Tittar man lite på bolagen, Svedbergs nämnde lite drygt 100 år. Vi firade det förra året, 102 år, men det var ju lite pandemi emellan så vi fick vila något år innan vi fick fira den rejält. Lite drygt 600 miljoner omsättning, en EBITDA på nästan 100 miljoner och en EBITDA-procent på 17%, 170 personer. har en produktion i Dalstorp, producerar en stor del av det man säljer. Och det vi producerar är plåt, möbler, och det var egentligen där början på 60-talet, trämöbler, spegelskåp, det du behöver i badrummet är i princip det. Sverige är den största marknaden för Svedbergs. Microdesign förvärvades 2016 i december. Finns i Laholm i Halland. En nästan 200 miljoner omsättning, en EBITDA på 12,5% eller 24 miljoner. Och har ungefär 50 anställda. Kommer med bakgrund utifrån duschkabiner som man då har sålt, och där Norge är en stor marknad för det segmentet. Man har då breddat upp produktportföljen med badrumsmöbler, blandare etc. den här delen. Och även då bara duschlösningar, inte bara duschkabiner då i den delen. Kasse förvärvade vi 2020 i december. Har den största produktkategorin är blandare. Danska marknaden ser lite annorlunda ut. Du har inte den typiska badrumsbutiken, utan det är köksleverantör och badrumsleverantör. De har dem ihop, köksleverantören. Och därav så säljer vi inte så mycket badrumsmöbler för att konkurrera egentligen med vår kund. Jag omsätter 100 miljoner knappt, en EBITDA på 21%. Det drivs fortfarande av Mikael Kasse som var ägare till det 100% innan när vi förvärvade det. Och är innovativa på att hitta lösningar inom sina produktsegment. Roper Rhodes förvärvade vi i december 21. Är ju då, som ni ser på siffrorna, större än alla de tre ihop innan. Nästan 1 miljard i omsättningen, i EBITDA på 130%, på 13,3. Lite drygt 200 personer anställda. Finns lokaliserat i Bath med både kontor och sitt logistikcentrum. En stor skillnad här är att den största delen av det som levereras ut i det här bolaget levereras ut på 48 timmar. Vill till att ha det på lager. Det skiljer en rätt stor del jämfört med Skandinavien på den delen. Jobbar också då med R2 och Tavistock som 2 varumärken på marknaden. Och England och en del då i Irland egentligen, eller UK. Och har då största delen i badrumsmöbler, blandare, speglar, överskåp, badkar. Inte i dusch ännu. Och det är ju sådana saker som man ser. Här kan vi då, eftersom vi har kunskap i koncernen, kan vi se hur ska vi kunna gå in i den marknaden med den produktkategorin också. Då. En del i alla de här bolagen är att vara väldigt bra leverantör till återförsäljarledet. Få leverantörspriser hos återförsäljarna är viktigt. Ha en designdriven produktutveckling. Red Dot Award är en utmärkelse som man kan få som både Roper Rhodes, Svedbergs och Kasse har i sin del. Tittar man lite in mer i engelska marknaden, det är ju lätt att tro att England funkar precis som det engelska parlamentet har gjort det sista året, men det är inte alls så stökigt på marknaden. Och det är väl tur det i den delen. Man kan se lite utifrån här, det är en stor marknad. Det finns en liknande branschlogik, alltså du säljer inte direkt, du går via ett återförsäljarled, du bygger relationerna med återförsäljarkedjorna. Det är en fragmenterad del, inte någon som sitter och styr den delen. Det finns ett uppdämt behov av renovering, underhåll och förbättringar i den här. Det finns olika statistiker i det här. Man är villig också att investera i sitt hem. Man vill att det ska se bra ut i den delen. Och Roper Rhodes då, det är ju tycker vi blev en perfect match. Familjeägt bolag, entreprenörsdrivet. Ledningen hade en liten ägarandel. De är kvar, driver och utvecklar den här delen. Och England är som sagt en stor marknad. Och ett 40-årigt bolag med bra historik. Har varit enormt skickliga på att bygga produkter, utveckla produkter och segmentera marknaden med 3 varumärken. Väldigt drivna på produktförsäljning i marknad. Ingen egen produktion utan alltid outsourcat i den fallet. Duktiga på sin logistiklösning också i den delen. Våra finansiella mål. Omsättningstillväxt på 10% per år, även konjunkturcykel. Nu har vi ju tagit några kliv där, men det innebär inte att vi håller igen och vilar, utan vi vill naturligtvis fortsätta att utvecklas. En EBITDA överstigande 15%, vi har varit där i något kvartal, vi är inte där på årsbasis ännu. Och se till att vi växer då både organiskt och genom att hitta intressanta fina bolag. ett antal hållbarhetsmål. Den är att minska vårt CO2-utsläpp, halvera det till 2030 med basår 2021. Och med basen med vårt arbete med GOG Scope 3 så har vi väldigt bra data här. Det här ställer också krav på när vi tittar på nya bolag att man har den här informationen med sig när vi gör due diligence. Så den är ganska viktig att ha med den delen i de här. Tar vi då Q4 så känns som lite gamla siffror. Det är snart ett Q1 som är färdigt. Vi får väl se hur det blir. Men 280 2021, 438 2022. Stor del organiskt. Vi hade med Roper Rhodes enbart i december 2021 då, så det är mer organiskt. Vi hade förvärvad tillväxt. Organisk tillväxt var minus 9%. Valutan påverkar 3% positivt. Och det innebär att Roper Rhodes, summan av den blir att de adderade 63%. Vi ser att det var en avtagande kan man se på marknaderna. Det börjar väl under slutet Q2 början Q3 i Danmark kan man säga, konsumentsidan. Man kan se på konsumentsidan i Sverige också i den delen. Och det kan man säga att det är där som det tar mest. Och då är ju den försäljningen då som går genom badfackhandeln då ute i de delarna. Så vi fortsatte med att jobba väldigt bra med Roper Rhodes. Vi är ju noga med att inte vara i och peta i våra bolag vi förvärvar utan vi vill lära och förstå. Jag är fysiskt på plats. Jag är sån som person att jag vill gärna se, lära och kunna förstå de delarna och sitta långt bort. Så vi är väldigt närvarande utan att i den skull förstöra. Och också har ju andra bolag i koncernen då, Cassö, Svedbergs och Makro, fått en hel del insikter och tankar från Roper Rhodes. Så vi lär ju varandra och får kunskapsutbytet i de här delarna. Vi har genomfört prisjusteringar på marknaden. Tycker vi har lyckats väl med det. Vi är rätt aktiva på den. Får vi en kostnadsökning så jobbar vi med att försöka kompensera oss med den delen ut. Fokus på att ta marknadsandelar. Det funkar så att det är de bästa, intressantaste och mest innovativa produkterna som skapar köplust. Det är det man vinner. Vi vinner inte enbart genom att vara billigast om den inte är up to date designmässigt. Så därför är det jätteviktigt för att investera i produktutveckling, innovation och lansera nya produkter. Och jag nämnde GOG. Det var att när vi började den så var det nog ingen som visste hur mycket jobb det var. För Scope 1 och 2 som är intern, Scope 3 är att ska gå till en leverantörers leverantörer och kartlägga den här. Och det är en väldigt stort arbete, men vi har lärt oss enormt mycket i den delen. Och det är också en kompetensutveckling. Vi hade inte kunnat göra det i varje enskilt bolag, utan det här kan vi då göra eftersom vi har en större bas och så delar vi informationen med varandra i den. Jag är också stolt över den här operativa excellensen, förbättrad effektivitet. Jag försöker driva, och vi ska driva alla bolagen, så när jag coachar vdarna i den här decentraliserade modellen vi har, så är det att du ska driva väldigt hårt, men vi måste också hela tiden kontinuerligt effektivisera i den här delen. Och vi försöker få det optimala i ledningar är att ha en väldigt tydlig person som driver sälj, framväxt, och sen ska det helst vara en ekonom som håller lite tömman och drar lite bakåt i den. Så man har två krafter i den här bolaget. Så det finns ett samspel i den. Så att det får inte bli att du bara jagar tillväxt eller bara jobbar kostnadsrationalisering. Du ska göra både och för ett kontinuerligt arbete. Att hela tiden bli lite effektivare idag än vad vi var igår och imorgon idag. Så det är ett kontinuerligt arbete. Så det tycker jag funkar bra. Det ser man i att vi blir lite effektivare, vi minskar lite kostnader och det kan vi alltid göra lite mer. Men vi får inte göra det på bekostnad på att vi inte lyckas med produktutveckling och innovation. Sen är det en tydlig strategi framåt. Det är organisk växt, jätteviktigt. Visst, det är en tuff marknad, men vi måste växa. Det är fortfarande väldigt många kunder som köper badrumsmöbler och tar fel beslut idag. Så att vi försöker få dem att ta rätt beslut, och det är det vi ska jobba med i den delen. Och sen att hitta attraktiva förvärv, hitta bra förvärv i den delen. Vi letar inte turnaround case, vi har inte den strukturen i den delen. Så då var vi i mål där. Så har du...
Vi har några minuter kvar för frågor också.
Ja, visst.
Det är bra. Om vi bara zoomar ut lite så noterar jag att 2022 så gör ni den bästa EBITDA-marginalen på typ 10 år. Ni har genomfört en del prishöjningar och fraktsituationen normaliseras. Ropar man varg om man säger att det kommer bli tufft 2023? Eller vad ser du som största utmaningen?
Alltså, om vi nu har en hög inflation, räntorna går upp, man vill på något sätt sätta press i den här delen, det kommer konsumeras mindre, matpriser går upp. Det är klart vi får en mindre total kaka i den delen. Så att men det vi jobbar med är så att bruttomarginalen är viktig att försvara i den delen. Se till att den absoluta kostnadsmassan inte ökar i den. Och så försöker vara så aggressiv vi kan i att ta organisk växt i den delen. Så att jag tror att starka varumärken brukar lyckas bättre i sämre tider. Men om man säger så här, skulle vi vara förvånade om det inte påverkar oss. Alltså någonstans, det är ju så man vill. Man kan ha synpunkter om hur man har skött Sverige AB, men det är en annan sak. Men det är i sammanhanget så får vi ju bli tuffare, för det är klart att människor håller hårdare i pengarna. Ja. Men det vi gör är att vi har ju också sett till att vi produktutvecklar rätt produkter som kanske passar lite lägre prispunkt då, i så fall.
Är det ni ser funkar nu hos konsumenterna så att säga? Är det pris som är i fokus?
Ja, det man kan se det som påverkar, se det som går igenom badfack och byggfack där konsumenterna är inne. Det var en återförsäljare jag pratade med som sa att i januari hade vi 70% färre som gick och besökte i butiken. Sen är det ett högre avslut på de som är där. Men jag vill inte säga att det går så att du tar en lägre prispunkt på produkterna, utan det är ju att ta de som gör och investerar fortsatt. Då. Sen, så det, fortfarande så säljs det ju badrumsmöbler och igen, det är många som tar fel beslut när de köper dem.
Exakt. Om vi återvänder lite till de återförsäljarna, hur ser lagerstatus ut på badrumsprodukter skulle du säga? Nu, jag förstår att det här är ju svårt att ha en tydlig vy på.
Men det är väldigt lite lager ute. Det som jag säger som vi kunde se, det är grossist i Norge i segmentet makro kan man säga att det var. Men det är ju liksom ingen som att de har tömt ner dem i det här fallet. Men annars är det ju så att det är så unika produkter så det finns ju inte så mycket lagerlagd. Utan vi får ju fråga, det är vi som får stå med lagret och skeppa ut och ta som i England. Det är 48 timmar i princip på största delen där som kommer ut. Så orderstock har vi ju en väldigt, väldigt kort.
Ja. Om vi pratar lite mer om er förvärvsagenda eller förvärvsstrategi. Ni har ju växt ganska mycket genom förvärv. Framförallt kanske förra året var ju nästan dubblerat på förvärv. Förvärv framåt, är det liknande sådana transformativa förvärv ni tittar på eller mer add-on?
Alltså det är både och. Alltså vi håller ju inte igen på de aktiviteterna. Vi träffar ju bolag, vi diskuterar, vi aktivt söker upp bolag. Sen är det klart att i en sån här tid, så något som när vi letar efter bra bolag, så klart kanske man får bättre betalt i bra tider om man nu liksom väntar, om man inte absolut behöver sälja i den delen. Men vi har ju liksom kontinuerligt kaffedrickande, om man nu säger så, och dialoger. För det är som vi säger, det här är som en dejt. Det är liksom första dejt och sen så vill det till att passa vi ihop i de här delarna. För oss är ju väldigt bra att vi hittar rätt bolag, men vi håller inte igen på det sättet, utan jag skulle gärna vilja ha några approach till. Sen ska vi göra det på ett strukturerat sätt. Vi ska inte riskera det vi har.
Nej. Du vill gå på fler dejter helt enkelt?
Jajamän.
Ja, det är trevligt. Noterar också att styrelsen föreslår att man ska återuppta utdelningen. Hur ska vi se på den kombinationen då, utdelning och förvärv?
Jag tror så att om man tittar då innan 2016 så var ju Svedbergs, som man har berättat för mig då, så såg man den som en obligation. Hög direktavkastning och så, jag tror att vi hittade från 2000 till 2016 så tror man delade ut 101% av vinsten i det fallet. Och det är klart, det har ju varit bra att ha den och då hade vi ju en typ av ägare. Nu ser vi att vi vill dela ut pengar, så vi har ju tagit en ny utdelningspolicy och vi kan dela upp till 50% av resultatet och sen se till att vi gör förvärv. Men tittar man i den storleken vi tittar så är det ju så att vi kommer ju, om vi gör ett nytt approach, då är det ju en emission i det fallet vi behöver göra ytterligare då. Och vi har ju ägare som tydligt har sagt liksom att vi vill åt det hållet i den delen av styrelsen så har vi satt den vägen. Sen vill vi ju gärna göra add-on också. För det är ju så att det finns ju en del guldklon att kunna addera till de bolagen vi har. En produktkategori till exempel, eller ny geografi och stärka upp dem. För vi har ju ett kunnande och kompetens som vi gärna vill bygga på. Så att men det ska vara rätt. Om man i det fallet köper ett bolag som inte är så bra så är det inte så lätt att bli av med det.
Nej. Men ni har ju också visat att ni kan hantera det när ni förvärvar rätt, så att säga.
Ja, så far så gör vi det bra tycker jag. Så
det är bra. Jag tror att vi får runda av där. Så stort tack Per-Arne för att du har varit här idag. Tack till alla er som har lyssnat. Vi är strax tillbaka.
Tack.
Hello, everybody, and welcome to this presentation of Carium. My name is Oskar Rönnqvist. I'm an equity analyst at ABG, covering the media sector and some technology companies such as Carium. With us today, we have the interim CEO, Maria Korsand, who is going to give us a presentation about Carium, and then we will jump on to a Q&A session. So please go ahead.
Thank you very much. My name is Maria Korsand, and I am interim CEO of Carium Group. It's lovely to be here. I really have looked forward to it in order to present our lovely company to you, a fantastic company to you. So what is it that Carium really does? I don't know whether you know that or not, but we help transforming the senior care. Now, what is it that we really do? It sounds nice, we're transforming the senior care. As we all know, the elderly population in the society is growing and is growing rapidly. It really is. Is it good? Of course it's good. We love our loved ones and we want them to get old and we want them to be a part of us and part of our lives. Of course it's good. But is it a challenge for the society? Yes. Because the hospitals are not going to be enough. The institutional care is not going to be enough. We have to find other ways to care for our loved ones. And that's why transforming the care for the seniors is so important. And that's exactly what Carium does. And I'm going to tell you about it. I'm going to tell you how we do it, really. First of all, we are passionate and really passionate about caring for our elderly that are growing in the society. We really want to care for them, and it is our passion. Is it a challenge for the society? Yes, it is. As I mentioned, the hospitals are not enough. It costs a lot for the society. If we even more that need the institutional care and the hospitals and all of that, and we don't have enough money in the society to do that when the population gets older and older. And because of that, we at Carium are convinced that technology-enabled care is a key. It really is. We need to enable that. So do we do that at Carium? Yes. We've been around for a number of years. We've done that. And I'm going to come back to that, repeated a few times in different ways. But what we really do at Carium is, first of all, we have lovely products. We have these devices that we have on the sideboard that you can press the button on and activate alarm. We have the watches, and we have necklaces. We have sensors in the beds, which feels that if the bed is not, it doesn't have any weight on it, and then thereby it can activate the alarm. Or we have sensors for the fire and the smoke and all of that. We have a lot of really good and advanced innovations and products. Now, when you think about it, when the product sends an alarm, or I push a button and an alarm is sent, what happens to it then? Or alarm taking or handling center is important, very important. You need to have really good, well-functioning alarm handling centers to actually take the alarm, to either talk to the person who's in need, or with the camera and the sensors that we have cameras as well, to understand what's going on, and to make sure that the person in need of help gets or help as efficient and as effectively as possible. Because of that, besides the product, it is mainly important to have a really good alarm handling centers. And we do have them. We have 4 of them. And I'm going to come back to that. But both of these sides that are important, what is it that enables it? Technology. Both for the alarm centers and for the products. So technology enabling care is extremely important. To have that, to build on it, and to further develop it. And that's exactly what we do at Carium. We do all of this. So the question is, do we add value to a sustainable society? Yes, that's exactly. Through our business model, we add value to a sustainable society. Now I'm going to introduce you to 2 people, Arthur and June. So who are Arthur and June? They're a couple who probably have been together for a long time. or maybe have met recent years, have probably lived a really nice life, both handling challenges and opportunities and had really nice time. Now they're getting older. As they're getting older, probably meeting some challenges, physical challenges or mental challenges. Are they going to have a nice life going further? Of course they are. They are loved ones. Of course they are. They're going to live longer and they're going to have a really nice life. But in order to do that, what do they need? They need support. They need to be cared for. To care for them, we have to have technology that we build on, and products that they can use, and alarm handling centers that they can use, so they can care for each other or for themselves. So for your own and your loved ones. Now, does Carium have a vision? And before that, I'm going to tell you who we are a little bit more. Who are we? We are market leaders. We are market leaders in technology-enabled care in Northern Europe. And we serve to 400,000 users daily. We have a revenue of over 7 billion Swedish crowns, whereof 75% is our recurring revenue. Now, note that recurring revenue is enormously solid business model. It is based on contracts that are long-term. It can be with municipalities, it can be with houses, or with insurance companies. In different countries, they work a little bit differently. But they are long-term contracts, and they are recurring contracts. 75% of our revenue is based on recurring. Then we have products as well. And for the past 6 years, we have delivered over 20% revenue growth year on year. Now, that's impressive. And we handle 25,000 alarms daily. And all of this we do 24/7. Because a business like Carium has to function well 24/7. And normally, when you're off and when you're holidays, and that gets really busy time for us, because it is a 24/7 business. So now, our leading star and our vision. Of course, we have a vision. Our vision is that all of our users live a richer life, feel confident, secure, and cared for. Now, put a little bit more essence on cared for, because it's really important. It is your loved ones. It is our loved ones. We need to care for our users, our loved ones that are getting older, that we want to have them in our life for a long time, and we are passionate about it. So this is our vision and our leading star. We are present in Europe with 4 alarm handling centers in Kalix, in Malmö, in Oslo, and in Blackburn. And then we are present in Netherlands, in Spain, in France, in Germany, and we have our products all over Europe. Now, with over 40% market share in Sweden and Norway, and over 14% in UK, and 10% in Netherlands, we are market leaders. Do we have potential and intent to continue growing? Of course we do. Of course we do, and we want to do that, and we are doing that. Now, this is slides or pictures of some of our products. We have a lot more than this, but these are some of the products. And the first one is the alarm centers, and then we have our devices and our necklaces, of course. But we have a lot of innovation in order to serve the society. And now when we talk about the society, we offer a complete technology-enabled care offering to the whole society, all the way from emergency responses to social alarms, to sensors, to products, to watches, everything that the society needs in order to enable the technology for care. We have that, and we are proud of it. And we have every intention to build further on that. Now, this takes passion, this takes innovation, this takes experience, know-how to really manage to deliver and handle and build upon. Again, coming back to what I called impressive, over 6 years, year on year, over 20% growth of revenue, year on year in 6 years, whereof 75% is recurring revenue. These are what we call our services. These are contracts that we have with municipalities, houses, insurance companies, different parts of organizations in different countries that we have long-term contracts with, and 25% on products. Is it important to have a balance between products and alarm centers or services? Yes, it is. It's extremely important. And you have to have the know-how of both of them to do that. Are we growing on both of them? Yes, we are. So the growth is on both of them. Now, we talk about the sustainable society. It is very important for us. Even when it comes to UN's ambitious sustainable goals, Careium plays a big role, all the way from being a good employer, to include a lot of people in the society, to produce well, and to take responsibility for everything that we build in order to create a sustainable society. And these are the 3 that we have chosen in UN's goals that we add value to. Now, talking about how good we are and what we offer and all of that, is there a market for this? Is there a market? Is the market growing? Yes, of course it is. If you think about 2021, about 20% of the population in Europe are over 65 years old. And follow this development, our projection is in 2050, it's going to be about 30% that are going to be over 65. So this is growing rapidly, and really rapidly. Is it good? Of course it's good, because they are our loved ones. We want to have them in our lives a long time. At the same time, the society needs to be able to care for our loved ones that we want to have with us for a long time. Are hospitals enough? No, they won't be. Institutional and residential care, they can't be under a longer period of time. So we have to delay usage of both residential care and hospital care as much as we can. And the only way we can do it is putting care at home. And the only way we can do that is through technology and knowledge and know-how. It is all about our loved ones that we are passionate about giving them care. And of course, we as families want to follow that. It is, of course, a case that we want to follow that, and we care about our loved ones. And we want to delay institutional care and hospital admissions, and thereby save costs for the society. And that's why technology-enabled care is so important. And it's all about the people in need, the ones that I love and we are passionate about. Again, another way of showing this market is growing is if 2021, it was a market about 3 billion euros. This is growing vastly. And in 2027, in a few years, we see that market about 7 billion euros. So here, there are enormous potential. Now, we talked about who we are, and we talked about our market and how fast the market is growing. How far have we come then? I want to say we are just in the beginning. Because we have penetrated the market, yes. And there are a few players, yes. But still, the big growth of the elderly is about to come. We are in the beginning still. And because of that, I believe market is still reactive. In a few years, we are talking about predictive, proactive, and preventive, because the growth is going to be rapid. Now, what do we do at Careium in order to enable that? Because we talk about technology-enabled care. Of course, we talked about our services. We have innovations, we have services, we have camera services, we have a lot of sensors and detectors, and they are really advanced, and they're going to continue becoming advanced. to deal with them, to make sure that the alarms are handled in a really good way, we have our alarm centers, alarm handling centers. Extremely important, because here, besides technology, the know-how is so important. You have to know how to handle an alarm center efficiently. It's very important. It is with knowledge, it is with experience, it is with processes. Everything has to work really well, and it is 24/7. To host them, then the platforms are important. We work with different platforms because they are important. So together with our devices, our products, our service deliveries, and of course the field engineering services that we have to make sure that the people in need get support as soon as possible. And the platform makes us a complete end-to-end partner for our customers, for our society, for our end users. Now, to summarize my pitch to you all, is of course, this is a growing market because our elderly population is growing. We have a solid and great business model because it is mainly on recurring revenue, and it is stable and it's solid. And we are a proactive player in a rapidly expanding market. And together, we add value to a sustainable development in the society. Now, I'm going to look at you and try to get a message across. That's important for me. Now, looking at you and presenting our company, trying to convey you why investment in this sector is so important. I'm going to ask you, are you wondering if it is important? And if you do wonder about that, why shouldn't you? The market is growing really fast. It's rapid growth. The technology, we have developed it, but we're just at the starting point. The innovation, level of innovation is really high, and the know-how is extremely high because we know what we're doing. We've done it for a number of years, and we do know that. Now I'm going to introduce you to a new product that we launched Q4 last year. This necklace that I'm wearing, or this one. It's called Alice. Isn't it lovely? It's actually an alarm system. It is an alarm system that we designed as a jewelry. Why did we do that? Because we want to prevent stigma. Stigma is a big question when it comes to technology-enabled care. And we want to find ways to prevent that. And that's why this necklace, we designed it. And we think it's lovely. Hope you think so too. By these words, I hope in these few minutes with you, I put some light into who Carium is. That's what I wanted really to do. And convey a message to you that the really rapidly growing market right now is technology-enabled care, because there is no other way we can do this. Because the elderly population is growing, and we have to find ways to do it. Hospitals are not going to be good enough. Or not, they are good, but they're not going to be enough. Or institutional home care is not going to be enough. So Carium, technology-enabled care, and this sector are a really good area for you to invest on as our recommendation, because it is about your loved ones. Thank you very much.
Thank you very much for that presentation, Maria. So now we'll just jump on to some questions. So first of all, as you say, the equity story sounds fantastic, but how about the competitive advantages? What types of moats do you have in terms of entry barriers for competitors?
But what we are really good at is being a complete end-to-end supplier. We understand the products, we understand the platforms, and we understand the alarm handling centers. It is important to understand all these perspectives to be really liable company. And we understand that. And the other one is recurring revenue. Never forget that, because it is a solid business case.
And how about the relationships with the municipalities and the institutional What do you think about the moats there?
We have great relationship with them. And what we talk about when we talk to municipalities that are our customers in different countries, we have them in Sweden, we have them in Norway, we have in different countries that we do. What they like about us and what we discuss is putting the trust on when we say deliver, we can deliver. We are able to deliver because we have know-how, we've been in the market for a long time, and we've shown stability over a number of years, going back in the history and going forward.
And just over the last couple of years, you did some M&A. You have acquired mainly some companies in the UK. You have also struggled a little bit in the integration part. So how do you feel about the restructuring program that is now completed? And then how is that going forward, do you think?
I feel extremely good about it and confident about it. I came into the company myself about half a year ago. What I personally worked with our management team and with our whole company is to reduce costs, to increase revenue, and get our economy in balance. And we've done that. And we are really happy about it. Not only happy about it, we're so proud of it. We are proud of our turnaround.
And then just staying on the topic, I think you've had some staffing shortages, some challenges in the UK. Are those fixed now? Is the run rate sufficient for you now, do you think?
UK works really well. Of course, we always are going to have challenges. But besides efficiency and saving costs, we put a lot of efforts on increasing revenue and business in UK. We've done that. It works well. And the other one that we have put a lot of focus on is our ability to deliver in our alarm handling centers in UK, including the competencies, including our ability to deliver to know-how. And it works really well. We have really good response times. And we are proud of that.
And how do you handle sort of the market is growing fast, obviously, but how are you taking your opportunity, investing in R&D, for example? Are you going for product development, or are you just thinking of riding the trend in terms of, I mean, as you say, during the cost pressure on the municipalities and the states?
We develop products. We do that. And that's why I wanted to show you one of our newest ones. This is important. We develop other products as well. It is important for us to keep on standing steady and stable financially. And we will do everything in our power to do that. And at the same time, further develop on our product portfolio, and we are doing that. And the third one that you would never forget is competence, know-how, knowledge, because those are very important issues for alarm handling centers, and we need to have that. Yes, we do that, and we balance our spending in a right way to continuously being strong and stable and still deliver going forward.
So also in this macroeconomic environment, we have quite high inflation at the moment. So are you able to move that pricing towards the customer with price increases?
Now, I'm going to not give you exact figures because I can't and I won't, but I can tell you where it is possible, yes, of course we do. But without going into more details because I can't.
All right, I see. I think we have time for one last question. Yes. Then just on the cash flow and balance sheet.
Yes.
So you breached a covenant in Q3, but now you turn into positive margins. Are you feeling confident in the cash flow situation going into 2023 and the balance sheet situation with the bank?
Yes. With no questions, no blinking or anything, yes.
I see. I think we are running out of time, so that will conclude this presentation. Thank you all for listening.
Thank you very much. Thank you.
Hello, everybody, and welcome to this presentation of Physitrack. So my name is Oskar Rönnqvist. I'm an equity analyst covering some media companies and the tech sector. With us here today, we have the CEO, Henrik Molin, who is, I think, going to start with a short video on Champion Health.
Let's start there.
One of the most important elements for performance is how we sleep.
All right, a little intro clip there to warm us up after the snowstorm outside. I'm Henrik Molin. I'm the CEO and founder of Physitrack. And yes, I am wearing the same clothes in this picture to make sure that you can recognize me. I'm going to give you a little introduction to the company and a little bit about the strategy and outlook, some of the latest data, so you can get your arms around this company, which is listed on NASDAQ First North Premier. And fun fact, we were nominated as one of the best IPOs of 2021 with a 50% gain in the first year. We lost out to checkin.com, and if anybody remembers those guys. But that was us. And the intro clip there was from our wellness division, which represents 4.3 million euros of revenue of the business today. The heart of that is Champion Health, a platform for that companies use for employee well-being and data analysis, data collection. It's 31% of the business today. It was exactly 0% 2 years ago and 10 days. So something that's grown quite rapidly via M&A and a lot of nice organic growth. But I'll get to that in a moment. The big part of our business, 69%, is life care. It's a system that we sell to hospitals and clinics around the world to help them take care of their patients so that they can feel better and faster and with a great experience. I'll give you some more details about it as well. We are a B2B business. We are a software as a service play. Our top line revenue is around 150 million Swedish krona. And I'll give you some of the KPIs there on a data perspective. But that's just to frame things. Just what do we actually do? And this is a little shot from the life care side of things. So we put tools into the hands of healthcare providers so they can take care of their patients where they're not in front of them. And that means that you can actually have a consultation on our platform, a specialized telehealth technology for physiotherapy. We invented that. That became a big boost in the pandemic. But you can also use that as an offline version of what you want to do. You can give people educational programs, clinical exercises. We have the biggest clinical exercise library for physiotherapy and neurology in the world. And so on the second overview thing over there, you can see a little interaction between me and my co-founder, Nate, with our proprietary telehealth technology. But most importantly, you have the tools that are needed to give the patients what they need when you don't see them as a healthcare provider. You give people the things to look at on their app, whether exercises, education, or surveys, so they can keep track of what they're doing, hence the track in Physitrack, which is the product. You pick them up on your iOS device or your website or even a piece of paper if you're low tech. Built into the system, reminders, chat and video and things like that, everything that can make that into a nice experience when you're not in front of your healthcare provider. There's data collection, there's data analysis as part of this as well. So if you're a bigger play, you're a big hospital or you're a big clinic that take data very seriously for decision support, well, you can look at that with the data that's generated through our technology. You saw a nice video on Champion Health. I think you get the picture. It's a holistic approach to well-being for companies. Everything that you need for your employees is in the space of an algorithmically driven app ecosystem. So the employees talk to the algorithm via surveys. They get tailored content. It's micro-tailored for their needs, exactly what they need to feel better, faster, and more productive. It can prevent anything from physical to mental ailments inside of this whole thing. So we try to collect everything in a very, very nice user interface. And it's something that's becoming more and more of a need for people, is to have everything in a simple place with one subscription model. That's exactly what Champion Health does. Very explosive growth. Zooming out a little bit on the business, we're a truly global business. We have 10 places in the world where we have people, so we have everything in terms of languages and religions and colors and all of that stuff. I'm very, very proud of being the founder of a company like that. So our life care system is available in 15 languages. Champion Health is available in English only, but we're localizing to German and Swedish later this year, because we actually have people on the ground here and in Germany that does business development for Champion. Truly global business. It's virtual first, which means that the cost structure around what we do is quite limited, and it helps us very much with the profitability of the company. We were a virtual first company before the pandemic popularized that, and it's a fun place to work. We have 147 people on board today in the team. Little snapshot from our latest quarterly report, just to illustrate how we think and what's in the DNA of what we do. Fast growth with high profitability is really the future of digital health. There are too many companies that have stepped too hard on the gas, funded by venture capital, and now they're actually struggling to survive based on what they have. We were never like that, because we had to make money to survive. This was something that was in there from day one, and you can see that in our reporting. We reported for the 8th time, I think, as a listed company last Tuesday, and these were the numbers. So you can expect top-line revenue growth in around 30% with nice EBITDA margin. And if you combine organic with inorganic growth, it was actually close to 60%. Now, if you just move back a little bit in time, where this came from, and so these little bars, they probably look pretty modest, because in comparison to this 150 million Swedish krona business that we are today, it actually looks quite modest. But in fact, this has been a rapidly growing, profitable business since day one. All the way from the beginning, when we started on the back of a napkin, me and my co-founder, up until we were in 2021, we never raised money externally. We never raised money from anybody apart from mom and dad and the closest friends of ours. So it's very deeply ingrained in our DNA not to rely on anybody for our success. So historically, we're able to generate some really, really nice organic revenue growth. And this very much continued as a listed company. And we have no plans to hold back on that. We have no plans to give up on that very important DNA that kept us alive for so many years. So that's the history of the business, just in some numbers. Back to some of the numbers from the quarterly report. What's interesting to point out here, we have an ecosystem that's underpinned by a subscription model. With very low churn, 1.2% on average per month, on a very cheap product. So vastly diversified, tens of thousands of paying users. That means that this is a very robust business. So you can lose a lot of users before it starts eating into your top line revenue. And this is a beautiful place to be, because it becomes a very predictable business. So in the life care division, about 93% of the business is recurring and subscription based. And this creates a very, very nice environment to plan your business. And on the left side there, you see some of the things that we report on a regular basis. Very transparent, nice reporting. We like telling people what we do. So we are, in line with our company values. We're an honest, we're a genuine, we're a transparent company. That's internally and externally. And on the wellness side of things, similar thing, but the numbers are actually quite significantly more explosive, because it's a new business line, and it's something that's hit very significant product market fit in a short period of time. We are in the middle of a well-being pandemic. A lot of companies are having problems with the well-being, the mental health of their employees. Many people are struggling to figure out a strategy on how to fix this, how to measure the right things, how to prioritize the right things to do. Now, Champion Health, as you might suspect from that intro clip, is exactly what they need, which is why you see these type of growth numbers. And so there's no sign of this slowing down. that division, excluding one company that we were a bit unlucky with in the acquisition process, but the underlying business excluding that was over 200%. So we have no plans to slow down on that. That 4.3 million top line revenue, we probably clock in at 9 or 10 million by the end of this year. That's how explosive that business is. So very strong organic growth. We decided to diversify into this years ago. The IPO made that possible. And the big reason for that, of course, we're very passionate about wellness. We're very passionate about helping. We're very passionate about putting the right tools in the right place with the right people. But the size of the total addressable market is very significantly bigger in wellness than it is for life care. So it was kind of a no-brainer for us to attack this size market. Now, I'm not saying we're going to be a market leader in a 222 billion revenue situation or a total addressable market, but I think we can carve out a nice little chunk of this just given what we've achieved so far. Whether that means, a few 100 million of top line revenue wellness or whatever it means, I think there's definitely space for something like Champion Health. There's definitely space to really make a difference here. So that's why we're in it. Because, and this is back to Champion Health that you saw, you want all the areas of well-being captured in one place. Maria, the previous speaker, were talking about it as well, having a holistic approach to this. You don't want 5 apps to do this, to figure out where you want to go with your employees, something that's really important to them. You want one place for it. And that's what we did with Champion Health. So it combines a lot of interesting things that you need in a beautiful interface, which also happens to be really inexpensive for a company. Latest thing that we did was to open this up to smaller companies. Champion Health traditionally was for companies with 500 employees and up, so an enterprise play. Last week, we launched a solution for small to mid-sized companies, which happened to make up 99% of the number of companies out there in the UK alone. So great way to sign up, put in your credit card, and a self-service model that's infinitely scalable. Launched in the UK last week, expected to launch in Australia, in North America in the coming months as we work out trademarks and the regulatory framework that we need for that. But some very interesting things going on. We never sleep when it comes to innovation. And again, one place to go, needs to be seamless, needs to be a nice place, and you don't want 5 apps to deal with when you're in this space. You want one, and we have it. I'll let you read this by yourself. I'm not going to walk through this. I wanted to point this out. In our sales process, we use data from companies that are our customers so that they can understand what the impact is. What kind of impact do you have on stress? What kind of impact do you have on employee attrition? What impact do you have on absences and burnout? What are the cost savings involved in being subscribers to a system like Champion Health? So that's how we use that. We're a little bit unlucky because a lot of companies that we work with, they want to be secretive. Champion Health is the secret sauce that sort of makes that employee well-being situation be really yummy. In some cases, people do want us to tell the world about them. Currys is an example. Currys is the owner of Eleganten. So that's our biggest rollout today with tens of thousands of employees, for example. It's having some tremendous impact. And so we're lucky. Sometimes people want to share with the outside world. Strata is a case study like that. That could be a nice one to read up on. All right, zooming out to the group. Why is this interesting? Because it's an all-weather thing. Well, maybe not in a snowstorm in Stockholm. When you're not wearing socks like I am not, then that can be a challenge. So, but we have a balanced portfolio of business. It's something that works in any microclimate. Because you think about it, this microclimate, people are stressed, people are having financial worries, people are working from home, they're in pain, it's a stressful situation, and we can help. We love helping, and actually the tech is really, really good, and it makes sense for these companies to invest in that. Because we're in this climate, that makes it an all-weather situation. And life care is similar. We're talking about people with neck pain and headaches and lower back pain because they're sitting at home in the kitchens like I did for 5 years building this business. They need rehab. They need the technologies to support the rehab, and they need our life care system, PhysiTrack. And that's why this is such an attractive investment, it's an attractive product for a business to put their money into on a subscription model, because that's the time we're in. So it's not really sensitive to these macroeconomic swings. Share price is, business isn't. Right, so what can you expect here? Well, top line growth in and around 30%. Not unlikely that we can do more than that, given just how explosive Champion Health is. Middle one, profit margins. Historically, we were north of 50%. Lifecare today is 49%. Wellness is hovering around break even on an EBITDA level, but the margins are expanding rapidly. It's very much in the DNA of this group to provide profitability, because that's how we survived. When I was sitting at home building this business in my kitchen for 4 years, not getting paid, the only way that this could work is by customers providing the revenue for us to be sustained with. And that's the DNA that's still with us. It doesn't matter that we're listed on Nasdaq First North. It doesn't matter that we're doubled in size over the last couple of years. That profitability DNA will always be with us. And of course, over time, what will that mean? Well, hopefully we can distribute to our shareholders and the long-term owners, such as myself. As I think it's an important part of a business. You're supposed to make money in a business. You're not supposed to be funded and living off other people's money. You're supposed to make money and at the end of it, be able to distribute that, some of it, to your shareholders if you're not investing it. And that is my last slide. I thank you very much for your attention, and I'll hand over to Oscar to ask some really difficult questions.
All right, thank you very much. I'll try my best. So just first, looking at the macro environment, how would that be sort of beneficial to you actually in terms of when we see maybe a lot of more issues work-related in your space?
Well, some examples of that. I don't know if you have a mortgage. I have a mortgage. I don't feel great about my mortgage. It's tripled. It was 2%, now 6.4%. That's what we're faced with in the UK. This is really fucking stressful. There are a lot of companies that have employees that are really suffering from this. So they need some sort of way to manage that financial stress. You need to talk to people about what does inflation mean? What does this mean with this interest rate environment? They need the tools to figure out how they're going to work out that mortgage, what it means over time. So financial stress education is now the most important module that we have in Champion Health. That's one example. Company management is really struggling to figure out, like, how do we talk to our people about this? They might have some banker, no offense, you're a great banker, Oscar, but they might have some banker in a suit and tie come in and talk about financial stress and whatever. They're not going to listen to them. They want to hear that from people like them, normal people. And we provide that in the platform, perfect example. And, stuff like becoming a parent for the first time, stressful stuff, we can help. That's irrespective of the market environment and the macro environment. And anything that you imagine about your physical well-being, mental well-being, there's always a need for that. And we really cater to that in Champion Health. So that's why it's actually beneficial in this type of market environment.
And then looking at the acquisition of Champion Health, so it did not only bring some top-line growth, can also see that it's a very strong brand. So how do you work with branding and what kind of benefits do you have, or how does that improve your moats in the business?
Yeah, well, I'll tell you a little story about Champion Health. Somehow they managed to wiggle their way into my YouTube feed when I don't know what I was watching on YouTube, but every time I turn on that thing, this was pre-acquisition, there was a video from Champion Health. I think it was exactly that video that we looked at. And I was thinking, what the hell are these guys doing right to get in my face the whole time? This must be a massive company. And actually I did some digging. It wasn't a massive company. And we were able to put that up for sale. So these guys are extremely skilled when it comes to finding the right channels to place their advertising, to do remarketing, retargeting to people that have been on their website. They also have some very interesting tools when it comes to communicating to the markets. They become a thought leader in employee well-being. They publish a well-being report once a quarter based on 1 million data points from companies all around the UK to tell them what is important for employees. This thing is picked up left, right, and center by thousands of companies every time it's published. And that's a great, great way to find leads for the sales process. And so those are just a couple of tools, but go on social media if you're interested, check out the Champion Health presence there, LinkedIn, Facebook, Twitter, etc. They really become a voice for the well-being of companies out there. Something that we actually needed as human beings, somebody to come out and just look at how should leaders approach their employees. Champion Health does that extremely well every single day. So it's just one of the examples of what they do.
All right. And then obviously the market is huge, growing rapidly, and I think you touched upon this just a couple of minutes ago, but what would be your main competitive advantages, and how does the competitive landscape look like?
Well, so there are competitors out there. We like competition. Like that being a late entrance into a market is an advantage because you can learn from all the mistakes that your competitors have done. So I was never afraid of competition. I actually thought it was great because people can knock down doors, spend a lot of money to get in there, for us to swoop in and just steal the business with a much better product. So that's our mindset around competition. You have the big competitive advantage is that holistic nature of that product, that you have everything that you need in one place. That was always our ace up the sleeve. Same with life care. You collect all of these different things in one ecosystem, so you don't have to combine 3 or 4 or 5 different things. You have one place to go for everything that you need, and that is the competitive advantage. So innovating with a holistic approach in mind, that's very unique. So you can compare the meditation piece to Calm, or you can there's Calm, there's Headspace, and there's other players like that, but they do one thing. And they do really well. We do a lot of different things, or 5 or 6 different things, and we do those extremely well. In combination, there's nothing like that.
All right. And then just on the mix between the divisions, the wellness and life care. So naturally, when wellness becomes a bigger part of the group, the organic growth comes up quite a bit, but also the margins are, I wouldn't say under pressure, but a bit away from your margin target. So you touched upon this as well, but how do you work with, in terms of product development, in high margin products in the wellness division, primarily Champion Health, to achieve your long-term EBITDA margin target?
Yeah, it's the biggest challenge of an entrepreneur. You have a fast-growing business, and you have margins that are low because you are innovating so much that you want to do something different. It's like having one foot on the gas and one foot on the brake at the same time. I don't know if you tried driving a car like that, but it's not easy. The good news is that this profitability focus is so deep in the DNA that people understand that the leaders we have in those businesses, they understand it. So we are really, really good at reading our target markets, we're setting the right pricing, and also keeping a cost structure that is good enough for that acceleration. So what you can expect for 2023 in terms of margins for wellness is that they will expand to probably around 15-20%. And it's not 49%, that's life care, but we've been in that high margin environment for so long. We know what it takes for something else to get there. So I'm not at all concerned about our ability to hit 40 to 45% across the whole group in the next 2 to 3 years. And yeah, we have the tools, we have the leadership, we have the product to get there.
Right. I think we have time for one final question then. Maybe, or perhaps a more tricky one, but I'll also give the question to you regarding the balance sheet situation. You have a couple of earnouts expected to be paid out in the coming 4 years, and the cash position, including the recently set up credit facility with Santander. How do you feel about the cash flow situation and the cash position, including the credit facility?
Yeah, well, all I can say about the cash flow position is that we've been there, we've done that. We've run a business off of a shoestring. Back in the early days when we started the business, we couldn't get a loan, we couldn't get any credit lines, we couldn't get any external injections apart from, mom and dad. So we know what it's like to run a business and to accelerate it quickly without relying on external sources. And again, I keep saying DNA like a million times in this presentation. It is so deep in our DNA to manage situations like that. So now, it felt like a luxury to exit at 2022 that actually saw 200% top line growth situation for wellness and having a solid liquidity position on the back of it, 5.3 million euros or something. This is comfy, compared to when I was sitting in my kitchen doing that thing, when you paid something with your credit card on day one, you were just hoping that you'd have cash in the bank by day 55 when you had to pay the credit card bill. This is easy. It's a 150 million euro business, and it's doing something that's the most important thing in the world. Santander, they were so happy about that credit line, they put out a press release and said, hey, we gave Physitrack Group a loan to acquire Champion Health. This is amazing. We have a really, really robust relationship with cash and cash management, and that's something that's never going to go away. And that's all I can say. Am I dropping the mic now?
You certainly are. All right. I think that will conclude this presentation as we are running out of time. Thank you very much for listening in.
Thanks, Oscar.
Thanks.
Hi everyone, and welcome to ABG Investor Days. My name is Nikola Kalanowski, and I'm an equity research analyst here at ABG. With us today, we have Simon Petrén, CEO of Humble Group. He will present to us his company, and then we will have an opportunity for a Q&A. And with that said, the floor is yours, Simon.
Thank you, Nikola, and thank you all for being here physically, and to everybody listening in online. Today we have an investor presentation with us, and I'm Simon Petrén, the CEO of Humble Group. We will do some introduction about the company briefly for you who are new listening in to us, and then also dig deeper into some of our growth strategies for this year and the coming years. We will also do a segment deep dive for you that have read our latest quarterly report and converting to IFRS. You know that we have changed our business segments. And then to wrap things up with some financial overview of the quarter and also the outlook for 2023. And after that, we will have some Q&A for everybody. So, Humble Group, we are a public company listed at Nasdaq First North, and we have been on this growth journey since around 2020 in March, when my company, Pandy, as you can see over here, we were acquired by Bain, which has been public since 2014 in the same market. And since then, we have had a really interesting growth journey through acquisitions and also growing the companies in the group organically. Our long-term vision with Humble is to become the leading and modern FMCG group focusing on health and sustainability. And our core values is innovation, entrepreneurship, integrity, and passion. And we really believe that there is a huge need out there for increasing availability of products that the consumers seek, that are healthier and better for you as a person, but also that is aligned with the environmental requirements to have a sustainable impact on our planet. And this really boils down to our group DNA. We firmly believe that in 10, 20 or 50 years, we're not going to care less about the products that we consume. Rather, it's going to be a requirement to exist in the FMCG market. And the same goes for sustainability. We're not going to care less about our planet. We need to do something, and we need to do it fast. So with these two macro forces driving the transformation of the whole industry, there is a lot of things happening out there. And all of this change is best driven by innovation, and all the data points that innovation is best driven by entrepreneurship. And this really boils down to our business model. We have acquired a lot of companies, but they are run by entrepreneurs, where we have a decentralized model where they maintain ownership of their local initiatives, and we from a central level use synergies and initiatives to drive more growth and profitability between these companies. Our key target for the coming years is to continue to scale internationally. The majority of our companies originates from the Nordics. We do have a few companies globally, the biggest one being Solent Group that we acquired in Q3 2021, mainly originating in the UK, but also having offices in South Africa and Asia. One of our latest acquisitions in Q3 2022 is actually an Australian leading sport nutrition brand. And we do have some distribution offices in the US and also in the Central Europe. But looking forward in the coming years, our key target here is to really conquer the European market and also establish a strong presence in the key international markets where we see a strong trend in health and sustainability products. And that would be Canada, US, China, and Australia, of course. We have also been working on a new initiative that we're launching this year, and which we call the Humble Incubator. And with the setup we have now with manufacturing, brands, and distribution, we have the capacity and ability to launch our own brands into the market. Historically, we have mainly been acquiring companies, but we do have a lot of experience creating brands. Me, myself, I started a company and a brand called Pandy. Noel Abdayem started a company called The Humble Co. And we have a lot of these sort of initiatives in the group already. We firmly believe that this is a way for us to continue to identify the white spots in the market, whether that may be a personal care product, a food and snacks product, or a sport nutrition product, we can quickly take that product, we produce it in our own facilities, and we can launch it through our distribution channels. And I see this as one of our most exciting opportunities going forward to continue to grow, but also to really take this challenger position where there is no good brand that gives the consumers what they want. In addition to this, we have been focusing a lot on our platform to grow with synergies. I can probably say that across the group, we have hundreds of initiatives going on between the companies. And this is also something that we're starting to see the results from. The companies actually growing faster when they have become part of the group than before. And this is just a few examples of purchasing, technology, manufacturing, business intelligence. We have 95% of the companies connected to our central ERP system, where we actually can monitor the data in real time. So we're not just building a modern FMCG group in terms of the products, we're actually starting from scratch with the right sort of systems, and where we will utilize that data to make good decision making, both centrally but also locally, and support each management. For you that have followed us for a while, innovation is at core for our company. We can now proudly say we have a patented technology with Uriba, which is our own process to mix ingredients into a new ingredient, a molecule. You can see here the different steps taking place. And I think this really showcases our differentiation compared to other players out there. We take innovation, we invest in innovation, and when we have something good, we will utilize this across the brands and our manufacturing facilities. So this is a great way and a proven process to replace sugar industrially one-to-one. We have already integrated it in several of our facilities and also in several of our brands and products, and we have much more to come. Another interesting part about the synergies in the group, I think this is a good example of Pandy. As you can see here, in the beginning of 2021, the company had been struggling quite a bit with the organic growth, the dark staples here. But with the acquisitions of 3 of our subsidiaries, FCB, Golden Athlete, and GSD, you can see here how these companies have attributed to the actual astonishing 309% growth over the period through the different volumes here. We can also see that the momentum in the organic growth have started really when we have started to utilize this synergy. And that's a little bit about how it works in FMCG, because if you start to get traction in one channel, it's easier to scale into additional channel and get additional listings. So this is a good example of how our platform is able to accelerate the growth within the brands that we already have in the group. And I mean, this is starting from quite small numbers. This is what we're going to do with the incubator. We can launch a new brand into several thousand stores just with the distribution network that we control and have available through the group today. And this is the most recent overview of the new business segments. I think historically it has been quite hard to follow how the group sticks together and how the companies work together. Our acquisition journey has been very strategic. As you can see, we have intergroup eliminations of just about 10%, which is the best example of that. We have acquired companies that already do business with each other. And the way we have done it is that we have one that we call an accelerator platform, which is our Nordic distribution, that will enable rapid market access and also global distribution into these 3 product segments that we focus upon. And throughout the group centrally, we have the research and development. We have our own center where we can do the gastropy on products, and we can actually analyze them electronically better than we can do externally. And then we have the 3 different parts of the value chain that we cover that we firmly believe is a way to get quicker access to the market and keep the margin in-house. Where we have the manufacturing to produce, we have the capabilities, we have the brands to bring our new innovation and show proof of concept. And when the market matures, we have the access to the retailers, but we can also provide them with products directly in contract manufacturing or private label through our own manufacturing. And to start things off here, the future snacking segments, I would say the one I'm most excited about and passionate about, since it's where I started my journey. We actually have a very dominant position, more than 80% market share in Sweden. And when you look in the grocery, in total, it's more than 90% if you count the digital channels as well. And we're actually driving more than 100% of the growth in this category, which is a very fast-growing category, thanks to our brands. We have Wellibites, Tweak, True Gum, Green Sales, Pandy, Debron, Healthy Co, Lev, Jalo Tofu, and Kryddhuset. So it's a good mix of brands and products that really take a position. And our objective here, which we have done now, we have gathered these brands into the same field sales team. So now we go into the stores at the category leader and try to expand this category with the retailers. The retailers want to focus more on health and sustainability, and it's very profitable for them to grow this category. And we are the driving force to do that together with them. To fuel our brands, we also have a great set of manufacturing facilities. And this is where we utilize our innovation and R&D and technology center to bring new innovations and products directly into production. We try the products and we adapt the production process to make them really good, and then we can scale it out with the brands. And I'm very proud to say we have a good assortment here to really scale with different sort of foam candy, jelly candy, drushies, toffees, lollipops, etc. Hard-boiled candies also. So we have the capacity here to really scale. And we have been investing throughout 2021 and 2022 into these facilities to be able to continue our growth and scale. And why did we do that? I mean, this is an illustration to showcase the actual historical performance of these companies combined. I mean, the group is quite new, since 2020 we started, but if we would have owned these companies, this is what it would have looked like organically since 2015. And we can see here it's a CAGR of more than 20%. So this is a very interesting growth segment for us, and we are just getting started. We have dominated the Swedish market already. We're scaling in the Nordics, but we're going to go into the UK, into the US, and the German markets, which is significantly larger, but where we see the same sort of consumer behavior and demand. The second segment that I'm really excited about is our quality nutrition concept. And here we have a little bit higher focus on the back end, the production, where we today have a vast number of companies covering the full assortment. And this is a concept that we have been working on during the last year, and we just launched it. We have already started to take some new clients in-house and also been able to scale with additional products into new clients. It's a concept called Arena Nutrition, and here you can see how our production facilities really cover many of the different sectors in terms of what you would want as a brand or a reseller of sport nutrition products. We have some of the best clients in the Nordic market today, and we want to be the greatest full service provider of quality products, most of them made in Sweden with high ingredients and fantastic taste. So this is a concept I really believe will be great for us going forward, but where we also can supply our own brands, of course. And talking about the brands, here you can see our assortment of sport nutrition brands, where Body Science probably is by far the biggest one. A great acquisition and growing really well. And we already start to see a lot of cross synergies between that Australian access to the market and also helping them scale into the European market. Another one I'm very excited about is Vitargo. It's a legacy ingredient, a brand where we have done a touch-up on the design and the website, and we're going to invest to scale it internationally now. And as you can see here as well, it's also a segment with strong growth over the years, but also mainly the last 4 years is most representative, I would say, where we continue to see a strong trend. I mean, sport nutrition is a strong macro trend globally, but I think the demand for high-quality Swedish products with great taste is really what distinguishes us from many of the other players out there. The third segment here is Nordic distribution that I mentioned, a catalyst in the segment for all of our other product segments. And here we have, through acquisitions, actually built a unique distribution platform for Sweden, where our brands and our products can access the retailers directly. We are also a reseller of additional brands, and we want to become the #1 partner for healthy and sustainable brands that want to enter the Nordic markets. And through our companies and our field sales team, we actually cover all of the market channels. And this is not something that I've seen exist in Sweden as of today. But we're already started to bring the brands in-house, and we can access non-traditional trade, grocery trade, convenience trade, pharmacy, sport nutrition, specialty trade. So this is a way to accelerate the growth and give rapid access for our own brands, but also external brands. And as you can see here, another stable segment growing very rapidly. And I think this is also something that gives me a lot of comfort in our ability to continue to scale with our own brands and through the incubator. And the last segment, sustainable care. Here we have a great set of brands, some of our biggest acquisitions, the Humble Co, Nady, but also great access to international market, mainly through Solent Group, but also distribution with Marabou and Amber House, which is covering the UK and the German markets. We also have some really high quality production here in Sweden, for instance, with Natumin Pharma and Diaspook candles. So another interesting segment where one of our biggest segments in terms of profitability, and a little bit more stable growth, but still growing nicely over the years since 2015. So all combined, I think all of these four segments really demonstrates the different values and what we're trying to do within each segment and each market. Just a quick highlight on some of the financials for the Q4. As you can see here, we're continuing to grow and expand. A lot of this driven through acquisition and consolidated growth, but also organically. I mean, we can see that, I look in my business intelligence system, I can see that since 2019, we've had organic growth every month except 2 months, and they were COVID impacted. So we have a really resilient group with a lot of products covering a lot of markets and channels, more than 12,000 B2B clients. And this is what we're going to continue to grow organically by increased volume and get additional distribution and international expansion. I have also already said historically we have been raising the prices. We will see price increases going in January and February, mainly this year, which is the first window since Q3. But most importantly, there is a continued strong demand from the customers for our products. We haven't lost listings. We have gained additional listings despite the retailers increasing the prices. And as I've said, when we entered 2022, we had organic growth focus. Growth is still our focus, but it's not an issue for us to grow. What we are focusing on here is to see how can we improve the profitability. 2022 was a tough year in terms of very high freight cost, the FX working against us. I mean, a lot of our sales is in SEK and pound, and a lot of our purchasing is in euro and dollar. So it has been a challenge, but we're working very hard to see how we can improve the profitability and also improve the cash flow. And this is the main focus for us centrally, but also our subsidiaries in 2023 and 2024. To wrap things up, the outlook for the year. I mean, we've entered the year with a strong momentum. We've been in a very active acquisitive phase. Now we have been working to set the platform and to really be able to scale on the initiatives that I've already showcased and all the investments we made throughout 2021 and 2022. Now it's the year for us to consolidate things, improve operations, and hopefully improve the margin and strengthen the cash flow through the coming period here. We might be looking into some additional mergers and acquisitions if we feel that the financing structure is right and where we are still able to delever our net interest-bearing debt covenant. So I think we have a good outlook for the year, and I'm very excited about it. I can probably say that, I mean, 2022 has been tough in many ways, but we have continued to grow. We have a lot of excitement in the group, and I feel really that it's a strong momentum, and we're just starting to see the potential benefits of being part of Humble Group and the platform that we have built. With that said, I would like to open up for some Q&A.
Excellent. Well, thank you very much for the presentation, Simon. I guess if we just start right on the M&A track, going forward, how do you look to balance growth and acquisitions as well as cash flows? What is your thoughts on that?
I mean, when we started this group, we basically started from zero. But today we have more than 45 companies. We have a clear sort of puzzle in each of the segments. What do we have and what are we missing? So I would say if we were to do further M&A, it would be with companies that strategically fit really well into the group, where we can beforehand see the synergies of that company helping the existing companies, but also where we then can help that company to scale further. I think the three Privab acquisitions we just made is a great example of that. Now we control the full Gottmix concept, which is more than 500 pick and mix stores in Sweden. We're going to put a healthy sector there with our brands. We control the energy concept, which is more than 500 gyms where we can put the sport nutrition brands. And we actually have more than 200 MyWay stores where we can sort of adapt the full concept of the products and actually get more visibility for our brands. So that's the sort of strategic acquisitions we would make, where it's also at an attractive price level and a good financing structure.
And if we take the current segments that you have now presented, the 4 segments, in which one of the 4 segments would you say that there is the greatest potential to grow, both organically and perhaps through acquisitions?
I think, I mean, the future snacking is a very exciting segment. Obviously, like there are success stories of similar brands like us, you know, growing 3-4 times the size of the whole segment today. And I firmly believe that some of our brands has that capacity to really be global outstanding brands. And I mean, FMCG is a slow-moving market. It takes time. We have been working on the internationalization for more than 1 to 2 years in many of these brands. And we've gotten the listings in UK and Germany. We have made all the arrangements to start selling into the US markets. So I would say if we're able to only get a fifth of the market presence we have in Sweden, in these markets that are 10 to 100 times bigger than our markets, it's going to be really exciting. So I would say future snacking for me.
And if we were to delve a little bit deeper on the qualities that you would look for when you look for an acquisition target, could you perhaps elaborate on what you're looking for?
I think it's pretty much the same answer as before. I mean, it has to fit really well strategically into the group that we see, you know, this is more than just an acquisition, additional sales profitability. It actually adds synergies to the group and where we can capitalize on that value creation.
And you know, pricing has been quite a big topic in retail, at least in 2022. How well would you say that your price amendment requests have been received recently?
We haven't seen really. I mean, it's a lot of effort and administration to do the price increases, but I think the general opinion here from our companies and the entrepreneurs is, you know, that the retailers are receptive to it. And with that said, I mean, we've done pretty much what we need. I think we're going to see some increases here going into the Q1 and wrapping things up here. But hopefully, and what we've already started to see is that actually a downtrend in the raw material cost and the COGS. So I think over time, I mean, I'm not a macro expert, but hopefully we're starting to see that downtrend and we don't need further increases.
And if we just finish off with 2023, you finished off with the outlook. What would you say are some of the greatest hurdles, you know, the greatest challenges, but where do you also see the greatest potential going into 2023?
I mean, the freight cost is already down. That's a fact. So we're going to start seeing the effect in the P&L from that, like Q2 and forward in full. And I think also to have less disruptions and volatility in the value chain. We have a lot to do with our net working capital. I think the group has really been positioned for growth. And that is one of the initiatives to reduce stock levels and accounts receivables and also improve the cash flow in the group. And I think we've already started to see the results from that in Q4, but we're just getting started. So I think that's one of the key takeaways. I mean, historically, growth has been the main focus on the market. Now it's profitability and cash flow, and we're turning things around quickly.
Excellent. I think we'll have to stop there. Thank you very much for the presentation as well as the Q&A. And thank you to everyone for listening.
Thank you.
Welcome back, everyone, to ABG Investor Days. My name is Henrik Hintze, and I'm an equity research analyst here at ABG. With me now, I have the CEO of FlexCube, Anders Fogelberg. Anders, please take it away.
Thank you. Thanks for having me, Henrik, and thanks for having us here presenting ABG. Nice to be here. And we will talk about FlexCube, and that means robotics and carts for material handling. And today we will talk about the company in brief and how we are actually changing the way we manage material movement and material flow within manufacturing and warehousing. So FlexCube was founded in 2010 by me and 2 other friends, actually, and we've been listed at the Nasdaq First North since 2017 in December. And we deal with, as I said, material flow and mechanical carts, robots for material movement. And you see 2 typical examples here on the right-hand side. First one is a mechanical cart to move tires for electric bus manufacturer Proterra in the US. And on the lower right-hand side, you see the AGV solution that we implemented to the market a couple of years ago. And that is actually with a very well-known automotive company run by a very famous guy. Can't tell the name here, but we're also very focused on the US and Mexican market, which is a good thing in this market environment, I would say. We have around 75% of our sales in US and Mexico and more than 900 customers. We'll speak a little bit more about that. In 36 countries. And as you see there on the quote, that this is, if you were to see this in reality, you would think that this is like an industrial Lego or a Meccano. So instead of welding carts together, we bolt everything together, which makes these solutions more flexible and that you can reconfigure and you can change as needs change. Brief map here of our presence worldwide. We have the headquarters in Sweden, as I said, but we also have manufacturing in South Carolina. We have sales office in UK, Germany, and then Mexico. And we have dealers also in several other countries, and so far we have sold to 36 countries. So what we do with the concept is basically that we create unique, customized solutions for our customers. I will speak more about this later, but there is a need to have very customized solutions when you deal with material flow. And so far we have delivered more than 60,000 carts in more than 6,000 different configurations. And instead of showing some logotypes here, we just show some press releases that we have, so you can see a little bit on our customer base. We work with very large companies globally. And of course, one of the major wins that we have is the Tesla Gigafactory in Berlin, where we have delivered carts for more than 3 million euros so far. But we also deal with other type of industries like distribution of food online, e-commerce for food, which is Oda, which is the similar company to Mathem that we have here in Sweden. And you may wonder, why do you need carts and why do you need reconfigurable carts and robots? And here is a picture showing on the left-hand side how manufacturing was made back in the days, a few decades ago. And then you delivered material in pallets to the assembly line using a forklift because all the cars were more or less similar to each other. Today, there is a large variation on the part supply, and you also manufacture in a higher frequency. You have more parts that needs to be delivered more often, and there is also a need to deliver different types of materials. For example, you make cars with hybrid engine, with combustion engine, with electric engine, and so on. And this is, of course, just an example with the automotive industry, but this is how it looks in any kind of industry today. So this means that you move from moving the material with forklifts to so-called tiger trains, where you move with carts. But in the future and today, you're actually now transitioning to moving more material with AGVs and AMRs, which are robot solutions then. And descriptive picture here of a plant for automotive. And we have some enablers there at the bottom, which we mentioned, which are the carts, of course, which is very much needed in order to transport this material, but also the automation piece of it. I mean, you basically get a very crowded environment if you continue to run the material with just tiger trains or forklifts. So you need to look into automation. It's very labor intense, of course, as well, which means that you want to look for savings, and then you look for automation as well. And the flexibility, of course, because there is a constant change and fluctuation on what you need to produce and how these parts look like. So to have a reconfigurable equipment is also very important. So we call that we are actually future-proofing the factories, and we're also looking into how our end customers are thinking about their future factories. And both BMW, Audi, and Kia are talking about this, that the future factory needs to be more flexible. It's harder to get people to work in these manufacturing plants as well, which means that you also want to go for more simple material flow with automation in mind, instead of teaching new people all the time on how to perform different tasks. So we see a very strong trend in the coming years on how this automation will be implemented in production plants. So the chart, the orange chart here, is actually showing the penetration of AGVs and AMRs. And AGVs are autonomous guided vehicles, so typically something that you've seen where you have a magnetic strip in the concrete and a robot follows that track. But AMRs are more dynamic in their route planning, so they use natural features in the environment to read the room, for example, with laser sensors. And you see how it's going to basically increase a lot over the coming years. And this is, of course, also driven by the onshoring happening now when people or companies are moving away from China to find production plant and production capacity in Mexico and US and Europe. And here we have a labor shortage. People really don't want to take these jobs. And we also have a wage inflation causing it to become very expensive. So therefore, you get a very favorable ROI if you look into automation. So the market for AGVs and AMRs are expected to grow roughly 35% over the coming years, reaching a market value of $13 billion by 2026. So what we do is that we're trying to come up with a product portfolio that matches the need here in the market. And we see that we have a very strong presence within the manufacturing sector, especially. And we've dealt with many of these companies for many years now doing mechanical carts. So we have a lot of knowledge on how to design and implement these in the processes that they have. So we divided our product portfolio into three pieces. The cart system is the FlexCube mechanical concept and the lift runner target train. And we also then have the AGV system, which is the e-cart line. That is a line follow AGV. We're using a camera-based technology to follow a contrast in the floor. Very simple to implement. And then on the right-hand side, we have a very interesting product because it's going to be launched this year. We call it the Navigator. And that is an AMR with dynamic route planning, and it can actually then travel without any guidance on the floor and so on. And here you see it more in an overview in the real environment. So you have the mechanical carts, which had a very strong year last year. We grew by 76%. When we started to look at automation products back in 2017, we kind of feared that, okay, the mechanical carts may be cannibalized by the AGVs, but that hasn't been the case. We see that they are still growing very rapidly. There is a need for all kinds of equipment with material flow. And then we have the lift runner target train, which we are the exclusive distributor for North America and South Africa, which is a product owned by the Kion Group in Germany. And if we look to the AGVs more in detail, that's what we call the e-cart line. It is a modular-based system where we are using different building blocks to create customized AGV solutions. And this is unique in the market as well, because other vendors, they have one size for a certain need. So they have one size for 500 kilograms pallet and one size maybe for 1,000 kilograms pallets. But we can take the customer need and convert it into a customized AGV solution very quickly then, which means short lead time and also short implementation time. We don't need any Wi-Fi to integrate in their environment, which everybody in the IT department is very happy about. And you have a standalone system ready to be deployed in the same day as you receive it. And of course, here we have something that shows up every day, no sick leave and so on, and it can work 24/7. You have swappable battery, so there is no disruption to the movement, basically, and typically we see an ROI of 6 to 12 months with this system. Then the robot, the Navigator AMR, that is going to be deployed this year. I'm going to talk about the pilot that we have ongoing here in the second quarter soon. But this is a unique system because we are creating a standardized interface between a robot and a cart. Previously, you have never had this in the market, so you have more or less just a mechanical connection between a robot and the cart when you need to move special size and so on. And that means that there is really no safety because the robot doesn't know where the cart starts and finish. So in our case, we have a standardized intelligent interface that we have applied for a patent for. And as soon as the robot then integrates with the load carrier, as we call it in this case, it will know exactly the size of that load carrier and will adapt the safety zones, creating a very safe solution to move around. And as you see, these load carriers, they resemble our mechanical carts. And the idea here is that we can upsell on our existing customers that now you can use your mechanical carts and you can create an automated system using the same type of cart stand. We can just add this interface, basically. So just to show a little bit on how we think about this is that there was skis in the market before and a ski boot, but there was no binding, basically. So this is what we're now creating with the AMR system. And to show this in a video here so you understand a little bit better what I'm talking about is that we have one robot, same size, that fits everything. And when it docks then to a load carrier, it lifts itself off the ground. So it's not tugging or lifting the load carrier, it's just navigating. So it sends signal to the motors who are on the load carrier itself on where to drive. It can move in both directions. And it is connected to the ERP system of a company. So it's completely dynamic. So you could see it as an Uber, basically, that it goes on different missions, moves a load carrier from one place to the other. And when the mission is done, it will go on the next one. And here you can see how it moves from a small load carrier to a very large load carrier. And this video is recorded at our Mölndal distribution center here in Sweden. And this is typically how it looks in a manufacturing plant. You have a large variation on the size and need for these load carriers. You also have inductive charging, which means that if the robot doesn't have a mission, it will automatically go and charge and be ready for the next mission. We have a pilot starting with a major OEM in the second quarter of this year, and here you can see a little bit about the variation on the load carriers themselves. This is going to be very interesting. We're also going on a large trade show in Chicago here at the end of the month, and we're also going to show it there, of course. Some financials then. We had a strong year last year, 82% sales growth overall, and we had growth in all of our main markets. And the main markets are US, Mexico, UK, Germany, and Nordics. We also had growth for all of our product lines, and actually the highest growth was in the e-cart line product segment, the AGV, and we have a high ambition to grow the robotics part of our total revenue in the coming years. So right now it's roughly 10 to 20%, but we want that to become more like 50% here, maybe already next year. We improved EBITDA from negative 17.5 to just 1.5 negative. And we also stayed balanced on the cash flow, even though we increased inventory quite a lot. As you know, there's been very challenging supply chain around the world, so we had to kind of increase our inventory in order to be prepared for delivering more of these solutions going forward. And also now we're adding products with the Navigator, of course, and we need to then add inventory for that as well. We've also improved the margin quite a lot, and driven by additional services like design fees and also increasing prices, of course. I mean, on some solutions, we have basically doubled the pricing in just a few years' time due to the inflation. But we also, of course, have a better product mix with more robot sales in there. In the fourth quarter, we also grew sales by 2.6%. And we had some significant highlights there with some orders. And as you can see, we also had an order to the defense and space sector, and that is a sector we're also targeting a little bit more now due to the global circumstances, of course. We have the benefit of actually being able to choose a little bit on the segments we're focusing on. So automotive is basically 50% of our sales, but everybody needs these solutions for material movement. So it doesn't matter basically what you produce. It's just a matter of where we are focusing on customer targeting. And we've had sales growth for 7 quarters in a row up until the fourth quarter. And we also had EBITDA margin improvements back since 2019 and ended up last year by negative 0.7%. Looking at the investment highlights, I would say, of course, this is a market that is expected to grow a lot with material movement over the coming years. And also, we have a competitive advantage going into this market with a lot of existing customers, prominent customers, and also that these customers are now looking to automate their fleets. We have a fleet out there already, but we also have the knowledge about manufacturing in general. So we know how to design these solutions in a very smart and efficient way. So that's another competitive advantage, I would say. And also that we have a product portfolio now, which I feel is very optimized to grasp more type of projects in the market than before, because now we can offer the AGVs, we can also offer the AMRs. And not every company is ready to take on an advanced product like the AMR, but they can still implement the AGV solution, which is a little bit more simple. Anybody can get that AGV going, basically. We also, of course, see that we have successfully improved our margin over last year. So we actually have confidence that we can continue to raise prices and do more when it comes to service and aftermarket. That will also play a role in our margin improvements going forward. So yeah, that's basically, I think, it, Henrik. That's the presentation I had.
Well, thank you very much for that. Let's move on to some questions then.
Yeah, thank you.
Could you maybe tell us a bit more about the competition in the space? What competitors do you have and how do you differ from them?
Yes, it's a little bit different. When we started, of course, with the mechanical carts, we had a lot of competition, welding carts, and that's a very fragmented market with a lot of local players. They typically are connected with one plant or one major plant, like Scania here in Södertälje. They would have maybe a local supplier for their carts, and same in other countries. But when it comes to the AMR products or the robot products, it's more like larger corporations. There we are competing maybe more against Toyota. ABB acquired a company last year in Spain called Asti, so they are also entering this market now. Expanding from the traditional robots that they are doing, looking more into robots for material flow. So we're up against a little bit bigger players when it comes to the robot side. But we are, as I said, we have an extensive knowledge on how to design these material handling carts, and the competition we face in the AMR market is more technology-driven companies, I would say. So they're more focused on the technology, and we are more focused on the presentation of the material.
Thank you for that. So looking at the different segments you talked about the robots and the mechanical carts, and so how do you think these segments will develop going forward? How big will they be in relation to each other?
I think we will see continued growth on the mechanical part of the portfolio, but maybe not as fast as the robot because it's smaller at the moment, of course, so the robot segment will grow faster. But as you can see in the picture here also, it's all based on the same mechanical concept, so they kind of tie into each other. So in the future, I think it may be hard to say exactly how much is mechanical cart and how much is robot, because they are interconnected in some way as well. And we see that a plant for production will need all kinds of solutions. Robots doesn't really, you don't have the benefit of a robot in all types of processes as well.
When you talked about your financials, we saw that your margins have improved quite drastically in the past few years. What do you think is needed to reach profitability from the level you are at right now?
I think higher volumes, basically, because we are spread out in different markets. I mean, we are present in the US, Mexico, we have sales offices in UK, Germany, and we have the Nordics, of course. And you need a certain level of organization in every market in order to function. And therefore, you need a little bit higher volumes. And of course, we have, in relation to the robot sales so far, we have a lot of people in the organization just working with the development of these products as well. So if we just see that we also get the higher volumes, we will definitely see the economies of scale throughout the organization, even operations, of course, because I mean, even if you just buy or sell a small amount, you need a purchaser, you need somebody to lead the plant and so on. So it's a lot about the economies of scale.
And how did you end up deciding on the geographies where you are present now?
Yeah, basically it was a coincidence. We posted some videos on YouTube back in 2010, and then, you know, immediately some Americans called us. And we thought, okay, 300 million Americans, you know, speaking English. We tried in Germany, but they said, no, not invented here. So, okay, let's move to a new market. And Americans are pretty convenient to work with. So, and in Mexico, of course, we tried that market in 2015, and we saw that it's a very fast. And I would, you know, if you're looking for investments elsewhere, I would bet on Mexico over the coming decade. They're going to have a huge growth.
Yes, I'm part German myself, so I know how they can behave on occasion. All right, so let's zoom out a bit and think a couple of years into the future. Where would you like to see the company in a few years?
I think we will have more global presence, like we will expand to Asia, of course. We already see a lot of interest there, but we're trying to be a little bit careful on, you know, the markets. But we already say that we are a leader in mechanical carts. You know, I think we are, you know, pretty well known in the US at least. I think we want to become the #1 for these type of solutions when it comes to manufacturing logistics, also on the robots. And I think definitely we can do it.
Thank you very much. That's all from me, and thank you all for listening.
Okay, welcome everyone to the next presentation here at ABG Investor Days, where we have the pleasure of welcoming and hosting CFO of Ovzon, Noora Jayasekara. My name is Simon Granat. I work as an equity analyst at ABG, and I'm the lead analyst that covers Ovzon. So with that said, for the coming 20 minutes or so, Noora will present the company, and then we will follow up with a regular Q&A session. With that said, Noora, please go ahead.
Thank you, Simon. So welcome to this company presentation of Ovzon. As Simon mentioned, my name is Noora Jayasekara and I am the CFO of Ovzon. I'm a proud Ovzonian since November 2022, so bear with me. I thought we'd start with some discussion or introduction to communications and satellite communications, and then dig a bit deeper on Ovzon. So today's methods of communications, we have our regular mobile networks that we operate in our mobiles and on our computers sometimes, 5G and so forth. Their advantages being very mobile, of course, easy to carry in your pocket, high bandwidth usually, and quite mature technologies. Then we have our fixed communications, fixed landlines, which offer a high bandwidth and to a relatively low cost. And then we have satellite communications with the advantage of offering a global coverage, not dependent on any land-based infrastructure, and quite mobile as well. The main disadvantage of satellite communications today is the high cost and investment required. So how does satellite communication work then? You have your mobile satellite terminals. We'll talk about them in a minute a bit more, which can be either operated on the pause, where you stand, wherever on the globe, or on the move, mounted on any vehicle, helicopters, boats, airplanes, and so forth. The signal then goes up to satellite in space, and currently lands in a teleport, a secure gateway in the land, and then is transported to a fiber connection to the receiver. And then the same flow obviously goes backwards. When we will introduce our own satellite, Ovzon 3, one of the unique capabilities of our satellite is that the need for a secure gateway in land is eliminated and built into the satellite, which offers higher security and improves the connectivity and the quality of the service. Currently, the mobile networks cover mainly only the most populated areas. With satellite communications and a combination of the coming 5G standard, we will be able to cover the whole globe. And that will lead to full connectivity for every type of users of communications. Today, approximately 93% of the world population have access to mobile broadband networks. Modern society is dependent on available connectivity. And almost any everyday tasks we perform are online today. Mobility, performance, and security, not least, are becoming more and more critical aspects of communications. Our customers operate most often in mission-critical operations where there is no room for malfunctions in the security. And that we see increasing as well, and that demand we see increasing, with guaranteed truly mobile, truly resilient, and truly performing connectivity being in the core of what we do as well. So a bit more about Ovzon. Our vision is to connect the world's critical missions via satellite. We do that by providing a service with high performance, high mobility, and a resilient service. We started off in Sweden in 2006. The company was founded by Per Wahlberg with some colleagues from a previous company called Swedish. The company originally was focused on mobile satellite terminals, but quite early in the journey, the idea of an own satellite with these unique capabilities I mentioned was started to emerge. In 2014, the company signed still our biggest and most important customer, the US DoD. The first order came in then, and that cooperation has continued ever since. We initiated the Ovzon 3 satellite project already in 2019, and 2023 is the year it's going to happen, and the satellite is going to be launched later on this year. During 2022, as you can see later on in the financials as well, we have focused truly on creating a world-leading SATCOM as a service concept, and have succeeded quite well. Our growth year in year proves that we are on the right path. Some words about the satellite communications market. The addressable market is large, over $20 billion US dollars. So there is potential. The market demands, as I mentioned, integrated solutions with efficient bandwidth being one of the most important capabilities. High mobility and cybersecurity has increased in importance in the service we deliver. Customer segments, we tend to divide them a bit in government and defense clients. Rescue services, we'll talk about that a bit later as well. Then we have different types of NGOs where our services are needed. Media, of course, and other types of commercial organizations. Okay, small text, a lot of text on this slide, but the industry landscape, so the value chain of satellite communications. First and foremost, you need a satellite. There are several satellite manufacturers. Our satellite Ovzon 3 is manufactured by Maxar. Of course, there are several others in the market as well. Then you need to get your satellites in space. Currently, the major launchers being Arianespace, SpaceX, and a few more. And then you need the terminals, as I mentioned. We started off as a terminal company in all essence. We produce our own terminals, which can be operated on the pause, so when you stand somewhere still. And then we cooperate, have partnerships with other companies who produce terminals on the move, which you can mount on moving vehicles. But we always adapt the terminals as well to function well with our service. Then you have your satellite operators. Currently, we lease satellite capacity from several of these operators. We find the right match for the customer's needs, the right location, the right bandwidth and capacity of the satellites. We will also cooperate with some of these operators, even going forward. Ovzon 3 will not be, we will continue leasing capacity even going forward. And then you have service providers, and I'll talk a bit later about our uniqueness, how we stand out in this list of satellite communications providers. And then you have our end users, the different segments, as I mentioned, and the different types of the different ways of in which our systems, our service can be used. So to whom do we sell and how? We talked about the market segments. Our key customers, still US DoD being the largest customer of Ovzon. Also UK MOD, Ministry of Defense. And in that service we cooperate with a partner, Airbus, who is acting as a distributor of our service in the UK. Italian Fire and Rescue Services, I have a case study later on in the presentation as well. In that service, we cooperate with an Italian company called Go Media, which also provides all the local support. We've worked with indirectly United Nations and the Colombian government. We have a short case study on that later on as well. And obviously Intelsat and IGC when it comes to our customer US DoD. So why are we unique? What makes us unique in this, this landscape of satellite solution providers? Ovzon Satcom as a service provides a full service for the end user and the customer. We provide the satellite terminals which are optimized to work with the service we provide. We engage currently external satellite providers for the actual communications or the... we work with a few selected teleport or secure gateway providers where the signal lands on land currently. But we always build our own network and use our own hardware in the teleport as well to secure quality in the service. And then I think one of the most important parts is that we offer a 24/7 customer service and surveillance of the service we provide. We have customer services NOC in Tampa, Florida, where most of our customer service personnel have themselves worked in the field. They know the importance of when things don't work, how important it is to fix it fast, and they understand the situation where the customers are, which has proven a very successful concept. So, bit where are we positioned when it comes to our current services and when it comes to our offerings when Ovzon 3 is launched later on this year. Already today we offer high bandwidth and a very mobile service. With Ovzon 3, we will be able to increase the bandwidth more. We have the onboard processor, which for some clients using Ovzon 3 will enable the direct communication terminal, satellite terminal or receiver, and exclude the need for on-the-land gateway. And we will also be launching a next generation terminal, Ovzon T7. Even smaller, even lighter, even more portable. Now it's not far from a mobile phone. Still quite not there, but not far from. Which is obviously big advantage for the user and for us. So a few case studies. We worked together with an NGO connected to UN in Colombia to enable humanitarian staff in remote parts of Colombia supporting in the country's elections, to my understanding. We partnered up with Bansat in this. It was a very successful service. We are very proud to have been a part of this and enabled their work. And then a bit more maybe on the rescue services in Italy. They are known for their high competence, and that comes from the landscape they have in Italy, both Alps and others, where the rescue services need to be able to operate, and no infrastructure there, so our services are needed. As I mentioned, we've partnered with Go Media on this. Our services were also used, or the Italian rescue services were called to support in the service work after the earthquake in Turkey and Syria. And we were quick to reposition the satellite we have provided them with, so that the area in which they were received the highest possible energy and best quality of service, which was also very much appreciated. And then some numbers before we open up for questions. As I mentioned, we've been focusing on growth, especially in 2021, 2022. The efforts in 2021 paid off during 2022, and we also managed to grow our business during 2022 quite well. The growth is amazing. When it comes to profitable growth, we are obviously not happy with the profitability of 2022, but we are moving to the right direction and towards positive numbers, which we are very happy with. And being in the industry and with heavy investments, obviously we have during the course of the years invested almost 1.5 billion in both the satellites, but also the terminals we produce. Our focus forward, continue on the more profitable growth path we are on. Obviously launch Ovzon 3 in the launch term, July to September 2023. And we'll continue to broaden and deepen our customer and market penetration. New customers, new geographies. And also look at our product and service offering and see how we can improve and broaden that. And continue positioning Ovzon Satcom as a service as the world-leading premium solution in the market, which we already are. Very fast speaking. I think we're ready for questions.
Fantastic. Thanks for the great presentation, Nora, I must say.
Thank you.
Always interesting to hear your thoughts about the industry and about your offering, etc. And I'd like to stay on the demand side, because as you've shown in this chart here, demand came down a little bit in 2020.
Yes.
Then it has increased in 2021 and certainly in 2022.
Yes.
How should we view the demand side going into 2023, etc.? I mean, I believe that some of this stems from Russia's invasion in Ukraine, but we also know that lead times are quite long in the industry. Sorry for the long question,
yes,
but talk about it,
no
please.
problems. So you are quite right. The geopolitical situation has generated some possibilities for us, and will continue to do so, I believe. It's not only the war you mentioned, but it's also other aspects. Society at large is more aware, so to say. And on the backside is, as you say, the long lead times. If you look at our quarterly report, you can see that the seasonality of deals we sign, most of the business we make in the fourth quarter, which is connected to the budgeting cycles of our largest governmental and that type of clients. They follow their process. But we work continuously to land new business also during the year, and not wait for the big bang in the fourth quarter.
Great. And I know that you've heard me ask this question before, but today most of your operations rely on leased capacity, and you also sell terminals per se. But you are currently utilizing the full capacity that you are leasing.
More or less, yes.
How should we view this going into 2023? Is there more capacity to lease out there in the market?
Of course there is. We have good relations with the parties we cooperate already today, but also with other satellite operators. So should we have a need before Ovzon 3 is up there, we won't have any trouble in finding solutions. But it's always a puzzle. We need to find the right type of satellite and the right type of capacity to match the client's requirements and needs.
And then Ovzon 3 has seen some delays during the years. And could you mention in brief just what's left to be done before it's now being launched? I know your new launching window is about in Q3.
Yes.
Around there. What remains to be done given your capex levels, etc.?
Right. So what remains from a construction perspective is the construction. So Ovzon 3 is the first so-called modular satellite being produced. It's exceptionally small, and it's built up from several modules. And what is being done now is that we are putting all the pieces together as a whole. And then there is one final test to be done. The name just escaped my mind, where you make sure that the satellite will be able to handle the shaking of the launch. There's a proper name, can't remember it now. So those are basically, and then it needs to be transported to the launch site, some preparing work there, and then the actual launch.
But basically most costs are taken?
Most costs related to the satellite are taken, then there are launch costs, transport costs, insurance costs, so some costs still to be taken, yes.
Yeah. And then would it be possible for you to sign agreements on Ovzon 3 before it's up in orbit, or is it rather that we should expect more deals after it has been launched, all else equal?
So from our side, of course, we are happy to sign. But what we have experienced is that especially government parties have a hard time signing for services that do not yet exist. But any type of letter of intents or we are exploring, of course, currently, yes.
And then just finally, I know that you are currently have around 45 employees, and it was not too far ago you were half that size, and certainly that has weighted on the profitability for you as a company.
Yes.
Should we view you as an investment phase relating to operations and overhead, etc., or do you believe that most have been taken just looking at your current operations?
Well, I think, of course, we will grow as we grow. That goes somewhat hand in hand. But we have our base in place. We currently use consultants to some extent, and that will phase out. And on the other hand, we will probably broaden our total number of employees somewhat over the course of the next few years.
Great. And then just your long-term vision. You're talking about more satellites. How is the demand, or can you talk about the possibilities for you as a company to, in the long run, have more satellites up in the air after in the orbit after Ovzon 3 has been launched?
Right. So how this works is that you, again, in my simple terms, you have to reserve a parking space, and you have to reserve the right to use the frequency band in which we operate, and we have 12 of these reservations in simple terms. So all possibilities are there, of course, and in the long term, of course, that is our goal, to utilize these possibilities we have created.
And I'm looking forward following that journey. That unfortunately concludes this session, but thank you so much again for attending here today and all else that are here today. So thank you to Nora.
Thank you.
Hello and welcome back everyone to ABG Investor Days. My name is Adrian Gilani and I'm an equity research analyst here at ABG. We've arrived at our final presentation for today, which will be given by CEO and founder at Cinis Fertilizer, Jakob Lidberg, as well as CFO Henrik Andersson. They will give a roughly 20-minute presentation and then hopefully we'll have time for some Q&A after that. With that being said, Jakob and Henrik, please go ahead.
Thank you very much. So, welcome everybody. My name is Jakob Lidberg, CEO, one of the founders of Cinis Fertilizer.
And my name is Henrik Andersson. I'm the CFO of Cinis Fertilizer.
So, welcome to today's presentation. We can jump into the first slide, and I'll go through the purpose of Cinis Fertilizer. It's founded around an idea to bring to the market, the fertilizer industry, a green and fossil-free fertilizer called potassium sulfate. And we do that by upcycling byproducts and waste material from new emerging industries and existing industries such as pulp industries, but also EV battery producers where we see the byproduct being generated. The whole project is built around a proven technology, so there's no technology risk. We have offtake agreements for our main product, the SOP, already signed with a Dutch fertilizer company. And we have protected ourselves with an IP, with a number of patents filed around applications for this technology. Looking at the production KPIs, we will bring products with a 100% reduction in CO2 footprint, which the market demands, driven by the market today. Users of fertilizers require this from producers today. Looking at the cost point of view, we will have a roughly 20% lower cost of production compared to existing producers today, the dominant production route, Mannheim process. I'll go through more of that in detail later. And compared to the Mannheim process, which is the dominating way to produce SOP, we have a 50% lower energy consumption as well, and we operate in a totally fossil-free context. The price of our products onto the market are in parity with existing products you find today. The next slide, please. So what drives the SOP market? The SOP market is driven predominantly by the population growth in the world today. Typically, that's 2-3%. So fertilizer industry as a whole grows every year with the global population. Secondly, as the world gets richer and GDP per capita grows, spending habits change. People spend more money on high-end crops and food such as vegetables, tomatoes, fruits, and so on, where you need SOP as a fertilizer to grow them. And today, the agricultural industry as a whole stands for quite a big chunk of the CO2 emission problems we see. And this is where we fit in with part of this puzzle to bring a green SOP, potassium sulfate fertilizer, to the market. Looking generally, the fertilizer industry, plants need basically 3 components to grow, main nutrients: nitrogen, phosphorus, and potassium. Seen as fertilizer, we operate in the potassium part of the fertilizer market. The potassium fertilizer market is predominantly sourced by a product called MOP, which is a natural occurring salt called, or KCl, potassium chloride. This is the main product for when you fertilize crops with potassium. This is okay when you live in a part of the world where you have lots of rainfall and you grow wheat, corn, and that kind of crops. But if you operate in a dry climate, you grow high-end products such as fruit, vegetables, tomatoes, and so on, with a higher price point in the market. They are sensitive to chlorides, and that's when you require a chloride-free potassium alternative, which is the potassium sulfate. Because the downside with MOP is that when you add potassium, at the same time you add chloride, and chlorides are actually harmful to plants. So plants that are sensitive to chlorides rely on only SOP for the potassium source of the nutrient. The total market for potassium fertilizers is some 80 million tons, and from that, the SOP market stands for roughly 10% of that part. So how is SOP produced today? SOP, our main product, the fertilizer, is produced today, as many fertilizers are, in a totally fossil-based context. It relies on an old reaction temperature at 700 degrees. That's driven by burning fossil fuels. The raw materials are byproducts generated out of the oil industry, such as sulfuric acid, which is a byproduct from the oil refineries when you produce oil and gas. And when in the reaction of MOP, which is the salt used, the natural occurring salt, and the sulfuric acid to produce the SOP, you at the same time co-produce and generate hydrochloric acid, which is a harmful chemical, a hazardous chemical. But this is the dominant way of producing, sorry, go back again. This is the dominant way of producing SOP today. Our way of doing it, we cut down the energy consumption by half. We rely on only green electricity, and instead of relying on waste products from the oil and gas industry, we take them from pulp and paper industry, EV battery producers, and so on. Now we can switch. So looking at the business case, we locked the intake of raw materials. So we have partnership with Northvolt, for example, to produce us with the byproduct from their EV battery production. We have an LOI with the chemical company BASF, one of the world's largest chemical company. And of course, we're talking to the whole pulp industry in Sweden at the moment. And for the other raw material, we require the natural occurring salt. We haven't signed LOI, ongoing discussions with K+S, which is one of the world's largest potash producers. And on the offtake side, as I mentioned initially, all the production from plant number 1 and 2 has been sold already to Van Iperen, which is a Dutch fertilizer producer. And we have an LOI again, ongoing discussions with K+S to secure the offtake for plants 3 and 4 as well.
Okay, here you see our business plan going from 2024 to 2030, which is include 6 different plants. And this is our capacity, installed capacity we will have in different years. So 2024, we will have the first factory up and running in Q1 in Örnsköldsvik, and that will produce 100,000 tons on a yearly basis. And then we go forward. And the second factory will be in Skellefteå, and that will be in total of 200,000 tons, but it will be 100,000 tons coming 2025 and 100,000 and 100,000 2026. And what is important here is that for the 2 first factories, as Jacob showed in the other slide, we have secured all offtake, which is a total installed capacity of 300,000 tons. And also the intake, which you saw from Northvolt before, which is actually also for factory 3 coming later on. And then we have an LOI for factory 3 and 4 going up to total, which you can see up to 2028 when all that capacity will be installed by 850,000 tons. And for factories 5 and 6, that is more strategic outlook, but in total we will produce in 2030 1.5 million tons of SOP on a yearly basis when all 6 factories are up and running with full capacity. Just to give you an understanding, with just 1 second, if you go back again, 100,000 ton SOP production, if we sell that today on today's market, the price is around 825 euros per ton or 9,300 SEK per ton. So that's around 900 million or 900, almost a billion yearly sales in SEK for the first factory. And we can take the next slide. What's important to know with SOP and MOP, as any other chemical industry, you gain on the premium between the intake of MOP and the finished goods SOP. And here you see a graph. On the left-hand side, you see our EBITDA margin. And if you look on the premium between MOP and SOP over time, if you take 10 or even longer than that, the premium is always between $200 and $300 between MOP as the intake and SOP as the finished good. Average price is actually $250. And the important here is, even if the prices go up of SOP, well, the margin in percentage might be slightly lower, but still it will be up above 20%. If the prices go down, the margin will actually increase, but we will not earn as much in euros or SEK and so on. But the important is, no matter where it is between $200 and $300 per ton premium, the margin is always above 20%. So it's really about taking this premium between the MOP and SOP. That is really how you gain the business here. Next slide.
Okay, so this is a slide presenting. We have launched our first project already. I'll go through that on the next slide. But this is a chart showing the time plan. So we're on target as it is. We started the groundbreaking a couple of weeks ago. And you see the team on the right-hand side headed up by Pirkko Westin, which is the project director, and they're hand-picked engineers and project managers for the project for the first plant in Örnsköldsvik. And this groundbreaking was important for us to keep the timeline and also the budget, of course. And a picture again of the groundbreaking ceremony together with chairwoman of Örnsköldsvik, the city where this first location is. I'm on the picture there in the middle together with the MD of the construction company. And to the right-hand side, you have a computer-generated picture of the office building, and in the back, the production facility, which is housing the entire process for the 100,000 ton of SOP, and the footprint for that area, that building is only 2,400 square meters. So it's not a super big industrial project, but rather a compact and efficient plant. In addition to this, what you don't see in the picture, we have a large warehouse space for our 2 raw materials and our 2 products that we will produce in the process. And here we're going to humor you with a small video, if we can get that to work, I hope. And this is actually an aerial view of the production site. And we have started, I don't know if you can get the video going, to see where this is located. We have selected a place logistically in a good logistical spot close to the harbor. So you will soon see there to the right-hand side, the top corner. And this is an old industrial site. So it's far away from people, and it's also in a perfect spot for our production. So we have good access to a port where we can bring in products and ship out, bring in raw material and ship out products. And we have started, probably I guess there would be a question about the environmental permit, which is a separate process running in parallel to this. But as you see, the project, this is a few weeks old now, this video. So we're good underway with piling and everything. And what's happening in parallel of this is, of course, the environmental permit process, and that is scheduled to take place on the 28th of March, which is just a couple of weeks away. And here we're confident that this will be a positive outcome on this one. So that's why we have started already, as I said, to be able to keep the time plan we promised. Okay, last slide, summary of the case. It's, we believe this represents a really attractive investment opportunity. It's exciting product in a market that screams for new green alternatives. The project is built around a technology which presents no technical risk. It's proven already on a large scale. We have protected ourselves with the patents, as I mentioned. They are approved already for waste material from the pulp industry, and they're pending as of now for EV battery producers and other industries as well, actually. We have key offtake and intake agreements to secure the case in both ends, raw material and production. We planned the business case around 6 production plants totally. First one is already on the way now, as of 13th of January this year. And the products we generate will bring to the market will have 100% reduction in CO2, which is actually what's driving farmers and so on looking for green products to help them reduce their own footprint in the end. The production route we selected or ended up in, compared to today's production, the dominant way, the Mannheim production, which is a totally fossil-based way of producing SOP, compared to that, we are less than 50% of the energy consumption to produce the same amount of fertilizers, actually. And we work in a totally fossil-free context as well, so we require no fossil fuels whatsoever. And production-wise, we have a more than 20% lower in production cost of total production. And as icing on the cake, in the end, we help customers solve circularity by utilizing waste or byproducts generated out of new industries such as EV battery production and pulp and paper industry, which is a backbone of the Swedish industry today, and help them to become more sustainable. So thanks, everybody. This was all we had. We're open for any questions. So thank you.
Perfect. Thank you for that presentation. I'll go right ahead with some Q&A. First of all, I believe you mentioned you were going to sell your products at market price. Just considering that the production process is more green, do you see any possibility of sort of adding a green premium, so to say, to your product?
Yes, absolutely. But what we've done is to secure the offtake and lock the business case on a long agreement. We actually opted out to hand that premium over to our partners, Van Iperen and the Dutch company. But absolutely, there are green premiums in the market for products today. But this is, we will sell our product in price parity to what's existing in the market today.
Okay. Can you give us any sort of rough idea of how large these green premiums are that are on the market right now?
No, not in figures. It's hard for me to say because if you operate out into the fertilizer industry, close to farmers and users of the fertilizers and so on, you rely on agronomists and you have a completely different setup than what we will have. We will be a more production-oriented focused company and do a lean and mean production and keep production costs low and provide a green product to our partners such as Van Iperen. So they would know that, and I can't give you a figure right now.
Okay. Regarding the production cost, you mentioned 20% lower production cost, partly due to the lower energy consumption. Is this the main reason for the lower production cost? Are there any other factors why your process is preferable to the Mannheim process from a cost perspective as well?
No, as you said, one, we utilize less energy. I mean, we have 50% of the energy use compared to the Mannheim production today. We don't need fossil fuels. I mean, increasing gas and oil prices are driving the Mannheim production cost up. And they utilize, as I mentioned, a byproduct from oil and gas industry, which is sulfuric acid. And the price point of sulfuric acid is also driving up if oil and gas industry, oil production, price of oil goes up. So there are three components actually in that. Less energy use, 50%. They utilize fossil fuels and also byproducts from the oil and gas industry, which has a higher price point than waste material out of the pulp industry and either battery producers.
Okay. And you mentioned that the process itself is very simple and that you've sort of protected yourself against competition using patents. Can you just talk a bit more specifically on what exactly it is that you have patented?
Yeah, it's the technology, as we say, it's proven already. It existed since the 1950s. It has been used in a larger scale. What we filed patents for that we have gotten approved already for the pulp, it's actually application patents. So to utilize the waste or byproduct generated out of a pulp mill, for example, or out of an EV battery producer, that waste material put into our process to produce SOP. So it's actually a whole application and use patent around this that protects us from operating with this process. So it actually locks out any competition from taking the same waste product with our technology, produce SOP.
I understand. Also, another question from a financing point of view. You expect to have the first plant up and running in 2024. And then you have fairly ambitious plans of opening up to 5 more plants after that. Do you expect you're going to be able to finance that with internal cash flows, or would you need more equity for that as well?
Two things. Internal cash flow will be the main thing, but also loans, bank loans for the rest. So that is our future of financing of factories. That is well built in our model.
Okay, perfect. And also perhaps a general sort of market question from my end on potassium fertilizers. As I understand, 2 major producers of potassium fertilizers are Russia and Belarus. Can you just talk broadly about how the sort of Europe's decoupling from those economies has affected the overall market?
Yeah, the market prices started actually with sanctions in Belarus. As you mentioned, Belarus and Russia are 2 large producers of potassium-based fertilizers. And starting with the sanctions and the war in Ukraine that made this disruption in the market and prevented all the inflow from Belarus and Russia, drove up the price points for MOP. And when MOP increased in price, SOP increased in price because there is a premium between the 2 products. So that's what we've seen now the past year and a half. But it's been a bit of a turbulence. But as our case rely on a premium between MOP and SOP, that has maintained even during this turbulence in the market. But yes, the market price has gone up as an effect all this.
Okay, but since the premium is the same, what, if anything, can you say about sort of the outlook for the premium of SOP to MOP? Is there any reason why we should see the premium expand or contract over time going forward?
Not from my perspective. What we learn is actually looking at with global warming, for example, we believe that the use of SOP will increase because of drier climate. Because if you have less rainfall, you cannot rely on MOP any longer for your fertilizer, as since you add chloride to the soil and you increase the salinity index, which is harmful for plants. So with drier climate, you will actually have to switch from MOP to SOP. In Middle East countries, for example, they have actually banned the use of MOP and favor the use of SOP just because of this reason. Okay. And also then you have increasing growth in greenhouse farming and so on.
Okay. A final question from my end before we round off, a bit more near term, talking about the environmental permit. You said you were fairly confident to be able to have a positive outcome here in March. In case there are any sort of completions needed to that, how long are you able to go continuing your construction project as is before you need the permit, so to say?
I mean, we have the production will start in Q1 2024, so we have the whole year on us, and we see no reason why this would not be approved now in March. So the hearing starts in 28, and this is quite normal process because the building permits have been approved and starting permits and so on for the construction. So that's why to keep the timeline, we started with erection of the plant already, with construction of the plant. I mean.
Okay.
So we have no doubt that this will not be approved in March as planned.
Perfect. In that case, that was all from me. I'd like to thank you for your presentation and for answering all of my questions. And I'll leave it up to you if you have some final remarks before we round off here.
Well, from my side,
thanks a lot for the time.
Thank you very much for the opportunity.
Thank you.
Okay, thanks.
Thank you. Bye-bye.